welcome, of course, once again, the KPMG Insight Center in Lagos, Nigeria, the commercial capital of Africa's most populous nation. I'm Rosi Sodiri, host of the Global Business Report. It is this 2025 Budget Day brought to you by KPMG and Arise News. Right now, you are about to witness one of the most insightful, granular, informative breakdowns of a budget ever seen on the African continent. And the executive that is about to take us through that, he's done it before in 2023, he's done it in 2024, he's about to do it again in 2025 on this big, beautiful screen that I love so much. Please, ladies and gentlemen, we welcome, of course, Mr. Toya Adeyemi, who, of course, is the senior partner, KPMG Nigeria, and CEO, KPMG West Africa. The screen is yours, sir. You're welcome.
Thank you, and good morning, viewers. Welcome to the KPMG Tower. We're going to have a great discussion this morning as we dive deeper into Nigeria's 2025 budget. So what do we have here? It's a 55 trillion naira budget. It's significant because it's really expansionary. When you look at the direction of all the comparative indices, you'll note that all the indices are trending upwards. That tells you something immediately. That tells you that the federal government of Nigeria is clearly on a trend of stimulating the economy by expansion. It's an expansionary budget. The other thing that you notice, of course, as you look through the budget, is that there's also a budget deficit. That simply means that our planned expenditures will exceed our planned revenues. The point has been made several times that a deficit is not bad in itself. It's all about really where are you directing the funds that you plan to borrow in order to fund that deficit. And that's one of the questions that we'll be delving deeper into as we go into the analysis today. In unpacking the deficit, let's start with the revenues. So you look at the revenue line, the first line here, which is the FGN share of net federal revenue. That's simply made up of oil revenues as well as non-oil revenues. We've added the two together there. When you look at this comparative number, embedded in the comparative was about a 6 trillion windfall tax, which was clearly a one-off tax. So such that when you look at the real increase here, if you took 6 trillion out of that and looked at the increase from here to there, you'll be talking about 13 to 29, which is really significant. That is stemming from two big things. One, of course, is the impact of the devaluation of the exchange rates, because you're looking at very different rates. The other thing is the planned increase in oil production this year. And that's where we see that the planned production is 2.12 million barrels per day. That's an increase over what has been achieved in previous years. And it speaks to an ambition to really up the level of oil that we're producing and stabilize these levels at a level to fund our budget. Embedded here as well, as you look into these numbers, when you talk about non-oil revenues are principally taxes, company income tax, personal income tax, customs revenues, etc. This budget speaks to an increase in all of those things. You'll recall that there's been a lot of work done in the area of tax reform. Those additional revenues are embedded in this budget, and we'll have a further discussion during the course of this program as to some of the measures to realize those additional revenues. So the big numbers driving the increase here are really what you see in terms of oil revenues and non-oil revenues. Moving down to the expenditure side of the budget, we notice a big increase in capital expenditure. This again speaks to government's purpose here. The purpose here, because a big chunk of this is infrastructure spending. So the purpose here is to stimulate the economy by boosting infrastructure spend. You'll note that when you come to non-debt recurrent expenditure, which is where you'll have things like the overheads, personnel expenses, etc., you'll note that a good attempt has been made to keep the increase in that line at more sustainable sorts of levels. So I'll also say here that there's an intention on the part of government to put more money in infrastructure while keeping overheads relatively stable. Of course, the number that has generated lots of discussion has been the number related to debt servicing, which is the proportion of our expenditures that we'll be spending to service the debt. A lot of discussion has taken place on this regarding the sustainability of the levels of debt for the Nigerian economy. If you were to take a percentage of debt service revenues to total revenues, you will get something in the region of about 34% or thereabouts. And I think the conventional wisdom is you should be at 30% or below. So we're slightly above the threshold. Is it sustainable? What are government's plans to really manage Nigeria's debt in a manner that doesn't result in us defaulting on debt? Again, we'll be diving deeper into those discussions. Is this budget vulnerable? In answering that question, we've got to take a look at the assumptions, because at the end of the day, it's the assumptions that speak to whether or not the budget is vulnerable or not. So $75 per barrel oil price, an exchange rate of 1,500, oil production levels of 2.12 million barrels per day. Those are the real things on which the budget hinges on. And again, during the course of this program, we'll have further discussions regarding how realistic the assumptions are and what are the various scenarios that could play out, because those are what will determine how vulnerable this budget is. But clearly, it's a budget that seeks to stimulate growth. When we look at the issue of the deficit, how is the deficit being financed? The answer is simple. We see that it's a combination of domestic and external borrowing. In terms of the domestic market, the question that always comes up is this level of borrowing, does it crowd out local investors or not? External borrowing is the question that comes up is about interest rates, sustainability, etc. Asset sales refer to financing that will come from selling existing government assets. I know there are lots of discussions around increased privatization and disposal of idle assets. Again, during the course of our discussion this morning, we'll get further into this. But the message here is that the deficit in the budget is to be financed primarily by domestic and external borrowing. A budget, as the president himself said, is more than numbers. It's really a statement of purpose, a statement of intent. And we begin to glean the purpose by looking at the sectoral allocations. Here we've presented the sectoral allocations in terms of a pyramid. And what's most interesting is that at the very base of the pyramid, the sector receiving the largest proportion of funding is security and defense. What does this say? This says that there's a clear recognition by the federal government that in building this economy and growing the economy, the foundation of it has got to be about providing security, providing a stable environment in which businesses, individuals can thrive. And that's why the largest allocation is in security and defense. The next largest area is in terms of infrastructure, which is spending on things that will help to improve the business environment, help to improve capacity. So infrastructure spending here on things like power, housing, transportation, etc. Then you have the allocations into what we will call the human element, where we look at education and healthcare. Those are the next sectors in terms of the overall allocation. You could add agriculture there because that's about feeding and improving food security in Nigeria. A part that I find really interesting is the allocation to technology, because we have to recognize that as an economy, we exist within a global context. And we all know what's happening in the realms of artificial intelligence and how that is transforming economies. Government has put a good sum here into technology. The Ministry of Science, Technology, Communications, Digital Economy, those are all areas that are receiving funding. Later on in this program, we will look at this concept of artificial intelligence and what governments need to be doing today to position economies to take advantage of this trend. There's also money put into the social safety net, which is all about taking care of the most vulnerable in society. So again, when you look at the budget as a statement of purpose, of intent, the intent is clear. Provide security, build on infrastructure, cater to human development, keep an eye on the future in terms of technology, take care of the most vulnerable in society. These are all noble intents. There's a broader discussion as to, are these amounts sufficient? In answering that question as to whether they're sufficient, we must remember that this is just the federal government's budget. We have to look at the budgets as well of the states and see the extent to which you have alignment between the federal government and the state budgets. Again, a topic of further discussion in later on today. So in wrapping up my summary, I've just highlighted here certain issues that I believe are matters that need to be unpacked in this budget. There's the issue of revenue, because at the end of it all, the whole budget hinges on our ability to generate the revenues that we have planned. So how do we enhance revenues and how do we assure revenue attainment? Debt, how do we manage our debt in a sustainable manner to ensure that we do not have debt default in the future? Food inflation, food security, absolutely essential. We've all seen the impact of food inflation on the overall inflation and ensuring sufficiency of that. The issue of productivity, fundamental to our economy. Many have argued that one of the big problems we face in our economy is that our production, our productivity is just too low. You improve productivity by spending on industrialization, energy security, energy policy, trade policy, further things to be unpacked. Keep an eye on the future, the digital economy, impact of AI, how Nigeria is positioning for that. And then finally, make sure we're taking care of the most vulnerable in the society, the spending on social development, healthcare, etc. So Rotus, these are just some of the issues that I'm looking forward to us unpacking during the discussions today. You could argue that there's another element here, which is the overall environment within which all this spending is taking place. It's an environment in which we need to continue to show a positive tone at the top, continue to execute on the plans that are embedded within the budget. So that whole question of tone at the top, execution capacity, that's the environment within which all of this is going to take place. Fascinating budget, and I look forward to the fascinating discussions we'll have. Thank you.
You're very welcome, Mr. Tola Adeyemi, senior partner KPMG Nigeria and also CEO KPMG West Africa. As always, you have set the tone for the day as you did last year and the year before. So we thank you so much. And now we're going to be looking forward to diving further into the budget for 2025. Thank you so much.
Thank you.
All right. Up next on the 2025 Budget Day, we will be speaking to Abubakar Atiku Bagudu, who, of course, is the Honorable Minister of Budget and Economic Planning. I'm going to sit down with him for a half hour to dive into those numbers that have been put down by the KPMG CEO. So stay tuned. We'll be right back. It is Budget Day 2025. Arise News, KPMG. Welcome back, viewers around the world. It is Arise News KPMG 2025 Budget Day. And of course, we are diving further into the 2025 budget of restoration, 54.9 trillion naira. We now are going to be speaking with the Honorable Minister of Budget and Economic Planning, Abubakar Atiku Bagudu. And we're going to be diving into the fiscal path for Nigeria. Honorable Minister, thank you so much for joining us. It's good to see you again. You were with us. You kicked things off last year. You're kicking things off again with us. I say thank you so much. I know you're a busy man. I wanted to start first off with the increase in the budget for a number of people who are asking, going from 49.7 to 54.2 to 54.9. I guess increases in some of the agencies where you're expecting higher revenue. Can you speak towards that?
Well, once again, thank you for inviting me. And just by way of background, I was here last year, and we are very clear last year that the renewed hope agenda is about confronting our reality without going back to blame game, but just appreciating that despite all past efforts with mixed successes, we are not where we want to be. And we have to take top choices, which Mr. President Asiwaju Bola Ahmed Tinubu has courageously taken. And last year, when we met here, the budget proposal was for 27.95 trillion. However, later in the year, there was an amendment to the budget that increased the budget to 35 trillion. So, and the 2024 achieved some remarkable successes, particularly in terms of reduction of debt to GDP ratio. Sorry, the fiscal is a deficit to GDP, which is a very important measure that analysts around the world pay attention to. So, and given the fact that it came at a time when the president had restored the sanctity of the central bank, meaning that the fiscal authorities cannot borrow beyond the legal limit of 5% from the central bank, ways and means was not available. And yet, in spite of that, that commendable success was recorded. And activities that were intended to be funded, particularly security gains that have come on the back of making resources available. And just last week, a state governor mentioned at a function that revenue to the states have tripled in the last few months. So these are the backgrounds with which we need to look at the 2025 increases. So the 2025 budget is the first full year budget coming after the achievement of two things: total deregulation of petroleum prices, total deregulation of the foreign exchange market, and in addition, the reduction in electricity subsidy by creating tariff categories which had improved, have reduced the government losses in the sector. And thus the budget of 54.99 trillion is a reflection of our confidence that the full effect of those tripod deregulation of subsidy regime will have an effect. Two, the increased security gains is making it possible for economic activity, particularly oil and gas production, to normalize. 2.12 may sound large, but we have achieved higher than that in our national life. In fact, the technical capacity of our oil industry is higher than 2.12, even as of now. What is a major missing factor is security, which pipelines have been vandalized and infrastructure for evacuation has been impaired. And with increased investment in security, we are seeing, to quote Mr. President, sunshine in all areas of the economy, particularly oil production, gas production. And secondly, not only are we expecting a resumption, or rather heightened activity in the sector, but we're also anticipating lower cost, because our costs have been among the highest in the world compared to our competitors, again, based on the fact that security is a big element, even a driver of the cost. So we are looking forward to higher production at a lower cost, and which we believe will have a material impact. And the tax reforms proposals that are before the National Assembly, and despite debates are widely acclaimed, we believe will also come into effect to further support the revenue projections that we have made in the 2025 budget of 54.99 trillion.
Fantastic. So speaking of oil, so as Twala Adeyemi went through this $75 benchmark, I wanted to ask you about flexibility around adjusting it, because as of Friday last week, oil prices fell below $70. I just checked right now, it's just at 70. So, based on where oil prices are, Donald Trump wants OPEC to reduce prices. OPEC said they will possibly add more barrels of oil to the markets in April of next year, which will increase supply. So if oil remains under the benchmark, then are you open to have to adjust that, or what does that do to your revenue production?
But Mr. President, surprisingly, was very, very interrogative about this issue, because he said we should be mindful of the transition then as it was in the United States, and the views of President Trump about putting pressure to get more out of all oil-producing nation. But given that a number of countries in the global economy are struggling to go back to higher levels of productivity or production, GDP growth was weak in most countries, and most countries are seeking to go back to even where they were pre-COVID. We believe that the increased pressure by countries to maintain or even increase industrial activity will keep demand for oil at a higher level. And even if we are to see an effect, there will be a lag. It's not going to be something that will change dramatically in a few months, or maybe it will take a year or more. And fluctuations in markets is not unusual. For budget purpose, they are discounted in the sense that spot prices from January to date, sometimes have been close to 80. So it's not yet worrisome that we have seen about 2 weeks of decline in oil prices. It's not surprising. It's not unexpected. We don't think it will impair our assumption.
Okay, fantastic. So for a lot of people in different sectors that are watching, they're asking, what is this budget going to do for me? So I want to get to agriculture, which was pointed out. and you mentioned the lag effect, which is very understandable. This May, I think the administration will be going on 2 years, so things are still relatively early. The agriculture sector, the president declared a state of emergency in 2023, and output has been struggling. I think real GDP growth for 2023 was 1.13%, 2024 was 1.19%. We have a new livestock development agency. Livestock contracted by 8% last year, contracted by 4% in 2023. So it's in a recession. With the amount of funds committed to agriculture to try to improve output and so on and so forth, are those funds justified, and are you optimistic that the results that you're seeking will be yielded?
Well, the Renewed Hope agenda have a number of priority items, 8 of them, and one of them is agriculture and food security. And the thought process is that agriculture is a key to poverty reduction, is a key to uplifting people out of poverty, is key to reduce inflation, as well as our desire to achieve higher level of inclusive growth, because it has the capability of mobilizing more people or supporting more people to do more. And with what we saw in the last few months, strong bumper harvest in many states, occasioned by increased insecurity, unfavorable weather conditions, and increased activity by those in the agricultural space, which is already impacting on prices of food items. It gives further impetus to do more in the agricultural, so that we maintain the trajectory of modernizing our agricultural production from the artisanal level to the livestock sector, to the fisheries sector, so that we can get yields to be higher. Because with improved yields, our people engaged in agriculture becomes wealthier and richer, which is a driver of wealth creation. And thus, more money, 1.5 trillion naira, is being put in the budget to recapitalize the Bank of
Industry,
the Bank of Agriculture.
Okay.
And it is anticipated that with that recapitalization, the challenge we are seeing in funding agriculture by Main Street banks will be compensated for. Equally, there are a number of initiatives coordinated by the coordinating Minister of the Economy, Wale Edu, in order to ensure that funding is provided to even those big private sector players in agriculture, who, because of the reforms and because of the cost of funds that have gone up because of the reforms, we have to take a systematic look at to support, to adjust because of the reform measures. So a number of initiatives are being undertaken in order to support agricultural production. We are engaging with investors around the world. Mr. President has been on different investment drives, and we have seen significant increase and interest in investing in the agricultural space. Mr. President was in Brazil. We have seen Brazilian investors committing close to $3 billion in livestock and crop production. We have just seen an announcement by a Saudi Arabia agriculture and livestock investment company that have increased their shares in the company Olam that is based in Nigeria. We met them in Saudi Arabia on Christmas Eve, the coordinating minister and I, among others. And they spoke about Nigeria as a prospective second after Brazil in terms of agriculture. Strong absorptive capacity, hardworking people who are in the space and who are who have been limited by technology, by financing, that it's a great, strong market, that when those are fixed, and with the way the economy has been turned in the right direction, they are looking at investing more. This is in addition to increased activity that we are seeing at the small scale level and even at the artisanal level. But just on that, to also further support domestic production, 1 trillion naira has been provided additional in the 2025 budget to support the solid mineral sector. Because while we have done a lot in terms of the institutional alignment, we have created a solid mineral sector, a steel ministry, but some of the risk money that is required to propel the sector to greater production and productivity have not been provided. And with this 1 trillion naira, one will see a further strengthening of activity in the solid mineral sector. We are seeing announcements by the day. Lithium plants are coming. At least 4 lithium plants are being constructed across Nigeria. Just day before yesterday in Abuja, Wale Edu and I attended a signing ceremony where an investor is committing $400 million to a cement company in Kebbi State, as well as a lot of artisanal and industrial scale investment coming into the sector.
Fantastic. I have to ask you about this figure at the bottom here, the deficits, and the two-pronged question. So, one, plugging it with respect to domestic borrowing, there's the fear of, crowding out the private sectors with respect to domestic borrowing. On the other hand, stabilization, the exchange rate, you mentioned the CBN, the exchange rate has stabilized. Does that mean with a more stable exchange rate, you can go and borrow externally? And then 3, I hope I'm not asking too many questions. Asset sales. There's been a lot of talk about debt capital in Nigeria in hundreds of billions of dollars that could be sold to raise revenues to plug this. So are you, how are you going to plug this? Are you worried about crowding out, the private sector with domestic borrowing? Can you go external since Naira has stabilized? And what about asset sales to try to plug the hole?
Well, let me start with asset sales because it has always been. Asset sale have always been the policy of government. But timing matters because when you sell an asset at a time, I remember McKinsey making a presentation to us when I was a governor about 3 years ago, and they valued the Niger Delta Power Holding Company plants that were built, that a $12 billion maybe investment. But at that time, because of market conditions, they say if you are to sell them, maybe you will record less than $2 billion. So Mr. President has always been clear that when the conditions are right, when we take the top choices, because even investors, before considering an asset investment, they have to consider the totality of measures, the difficult measures to turn the economy have been taken, and this will enhance the value of assets that we might have to sell. And I'm sure that is something consistent with our reform programs. Secondly, on the deficit of 14 trillion, given what we saw in the innovative approaches to financing, first because you don't have recourse to Central Bank of Nigeria at all. So under no circumstance will the Central Bank be going above the legal limit of 5%. So I think that should comport the economy that we are not going to have recourse to. So because we are also going to market, and we are going to market in different ways, innovative financing, innovative approaches, the local bonds have been issued where government have raised money. And this, of course, this represents a statement of intention just to ensure that those whom we have borrowed from will be confident that we will have enough to meet their to meet the expectation. Sorry, to meet our debt service obligations. But if, as we anticipate, economic conditions will continue to improve, we don't see, maybe we may not need to spend up to that in debt service.
I want to touch on, there's so much to touch on, but running out of time, but education and our youth population. The budget allocation to education has increased. You've got the NEL fund, where the administration now is funding education for students who want to go and, who are unable to pay for them. I want to ask about job creation, because it's one thing to, yes, get more students into school and get them to get degrees, but what about the labor force that they are going into? Can it absorb them? So what is, as far as this budget is concerned, in terms of stimulating the economy in order to create demand for skills and jobs for this youth that are going into the labor force, what's the outlook there? And then, are you worried about defaults? I mean, I know that the fund, this NEL fund, allows for students to wait until they get a job before they can pay things back. So job creation, the labor force for the youth, in terms of education and your outlook there, as far as this budget is concerned?
I think for us, the big story is that the economy is headed in the right direction. And once it is headed in the right direction, what is important is additions to do. So when public investment is made to support education and skill in an economy that is facing in the right direction, then the private sector can even be more confident that there's a skill set in the country that can support private investment. And it makes sense, it's mutually profitable. And that's so both the NEL fund and the increase in spending on education are designed to support that. Equally, we are engaging with many countries in order to see how legitimately our young ones can provide outsourcing services from where they are, can participate in business processing outfits. I was in Enugu about a month ago, where a European business park, I visited a European business park supported by the Australian Development Corporation. And young men and women are providing services from Enugu to companies in Europe. And so we are talking to a number of countries. In fact, my ministry is leading that because we are responsible for development cooperation. So we are discussing with a number of countries. The current country director of the World Bank was coming from Philippines, where he helped create over 1.5 million jobs for Philippines young men and women, providing services to companies from Philippines. And we are engaging him to share from that experience and do more. The Ministry of Digital Economy is currently in the process of training 3 million Nigerians in technology jobs. And we have funding for it. We have secured over $600 million in a program called ADICE, that is for training and retraining of young. We have seen demand for software engineers from different countries. Japan, for the Japanese ambassador told me that Nigeria is the first port of call for Japanese companies now seeking software engineers. So this investment, yes, there might be some risk. Somebody who took a loan may be challenged, even in a normal market. We have seen the student loan market in the United States, which is more advanced than us. Yet sometimes the government may even need to intervene. But I think for Nigerians, I believe that is a desirable program to the extent that even if circumstances demand that those beneficiaries are supported, by a reduction, I'm sure Nigerians will welcome it.
Fantastic. Running out of time. I still have so much to ask you. Do I do health or infrastructure? Okay, healthcare. Health is wealth. Also, you've increased the allocation for health. But, Honorable Minister, what we've noticed from studies is that most healthcare is either employee-funded or out-of-pocket, right? So the approach to getting more universal coverage with healthcare should be targeted from a job creation angle, so where more people have jobs and then they can stay healthy and take care of themselves. What's the outlook there?
I agree with you. That's why we want to create an economy that is creating jobs and meaningful jobs. And the only way to do it is to ensure that distortions are eliminated as support and equitable, the ease of doing business is promoted. We have, President Asiwaju Bola Ahmed Tinubu have created, in a matter of 18 months, an economy where we are not determining winners. It's a fair market, and we are seeing value for it. Companies, analysts, investment outfits are increasingly showing interest. We believe that will create the kind of private sector-led economy that we have always sought. And because the structural changes that we need to take have been taken, and therefore our economy will continue to add jobs that will support health insurance, among other desirable social outcomes.
I'll be remiss if I don't ask you about power and electricity. So infrastructure, you've allocated a chunk of money there. You talked about the tripod. We call it the three-headed dragon on Arise News, the FX, the electricity and fuel subsidies. You have done quite a bit to try to normalize the tariff structure. We hit, I think it was 5,801.6 megawatts, a new peak. The Minister of Power did say, though, that there's still legacy debts owed to the GenCos of about 2 trillion, and there's still a tariff shortfall of 1.9 trillion. So, and I understand the pressure on Nigerians with the whole Band A, B thing. In fact, the Minister of Power, that's Mr. Adelabo, even said that Band B customers are not paying enough. How do we attract more investors to come into Nigeria to get us to, in order to improve our power infrastructure, if the tariff regime is not completely liberalized? Well,
that's why I said, first, I started by explaining the doctrine of renewed hope agenda, and that's a very sober reflection. It calls for very sober reflection and appreciation of President Asiwaju Bola Ahmed Tinubu. You could have easily come to the job and say, legacy debts are cost, and blame them on someone. Right. But he said, well, we asked for this job, no blame game. How do we solve it? And we are solving it. He's leading to find a solution in the most market-supportive manner so that they are sustainable. The combination of the changes that have taken place have limited the options available to reform the electricity sector as quickly as we had intended, because the combination of both the fuel subsidy removal and the forex market liberalization, which has been responded to by increased social protection, made us to re-examine how can we ensure that the electricity sector. I was in Saudi Arabia before coordinating minister of the economy before Christmas, and the minister of economy of Saudi Arabia was telling us that about 9 years ago they appreciated that they are not facing the right direction, given what is happening in the neighbors. And one of the things they realized that just like Nigeria, a combination of subsidies is taking away all the revenue, and including electricity subsidy. Electricity is still subsidized significantly but Mr. President is determined, and in spite of all the approvals, let's make more available so that Nigerians can be confident. let us investigate what we can do about legacy debts. The discourse, there are challenges with the privatization exercise itself as to the capacity and experience of the distribution companies. Most of them do not have utility background, so maybe that is something. But there has been concern and steps are being taken, and the GenCos are being engaged. Recently, there has been a board announcement of the National Bulk Electricity Trading Company. And among first issues they are going to confront is the issue of cleaning up the debt so that we encourage production. Nigeria has been remarkable in ensuring that even if it is inconvenient, we meet commitment. Right. The Azura, a company, because there is a multilateral investment guarantee of the World Bank, we have been, as painful as it is, meeting all obligations. So the segmentation of the market and the increased investments, I believe we'll see more power availability, and that might encourage the discussion on appropriate pricing for a wider category. And increasing use of AI-based technology and digitization to collect both from current customers and as well as other government services. I'm sure we'll see more collection even at the current tariff rate.
Minister, you've been fantastic with your time. Technology is my favorite topic, but we've run out of time. 30 minutes flies so fast. Mr. Abubakar Atiku Bagudu, the Honorable Minister of Budget and Economic Planning, thank you so much for taking the time to talk to us about this 20 minutes.
Thank you.
Really appreciate it.
Thank you.
All right, it is Budget Day 2025, Arise News KPMG. Up next, my colleague Bosun Amofayo will be talking to the private sector about their reaction to the budget. Stay tuned, we'll be right back.
Welcome back to KPMG Arise News 2025 budget today. I am Bosun Amofayo. We're still live here at the KPMG Towers in Lagos, Nigeria. Now let's get the macroeconomic breakdown of the private sector thinking into the 55 trillion naira budget just signed last week by Mr. President. Meet my panel, Tilewa Adebajo, who is the CEO at CFG Advisory, and of course, Wale Adelohun, who is a partner at KPMG Nigeria. Gentlemen, good morning. Good to have you.
Good morning.
One is a Democrat, the other a Republican. I'm not too sure which of you. There's one in a red tie. So I'm not too sure who amongst you will be looking at the budget. But both of you are from the private sector, so I love this. We've listened to the CEO, Wale, giving us a very robust opening of this particular event, and he spoke about those 7 pillars of the budget, called the 7 pillars, those key sectors. And then we've got the Minister in charge of budget also speaking to the government side, the fiscal side of the budget as well. So let's take this to the private sector, Tilewa, and again, we'll look at some key parameters in the budget. So let's start with money is everything. So let's start with exchange rate. It looks like everything boils down to exchange rate, 1,500 as a budget assumption for this budget. What's your take on that figure?
Well, it's neither
ambitious.
It's neither here nor there. I think it's quite realistic because it reflects the market conditions at the moment. So I think what is more important for us, I think, is to understand what the impact of this budget is on the Nigerian economy as a whole. If you take a look at the analysis, I think Tola gave a very fantastic overview. And in terms of drilling down on his own analysis, what I'm looking at that's striking is the fact that if you take a look at the breakdown of recurrent and current expenditure, you're seeing recurrent expenditure about 3.64 million. Most of this money is going towards the households. So basically, it's giving households some sort of consumer spending. The key factor here is the capex of about 23.8 billion, which is about 4 trillion, which is $14 billion. How is government going to spend this to be able to impact the economy? That is what is important. A total budget, so basically the revenue is about 40 trillion. But what is important is that government never meets its revenue targets. probably they hit about 70% of these targets. So the deficit, the debt from this budget, which they're talking about, the deficit of this budget, we're looking at about 14 trillion naira. Tola worked it out to be about 34%, but probably that's going to be increased more to about 45%, because if you discount the fact that government is not going to meet its revenue targets, then it becomes an issue, because debt becomes a big issue in the market. But overall, the budget is, if you take a look at the whole size of our budget, it's only about $30 billion. And that's only about 15% of our GDP of $200 billion. So in effect, government's contribution to GDP is only about 15%. So what is important, I think, is that we need to focus this time on the government policies, because we've reached a level of economic stability. So how do we begin to build on this stability for growth? And what is important is that government needs to put out the right policies to ensure growth, because the capex budget for this year cannot build a refinery. Dangote refinery is about 19 billion, capex is 14. So it's important that we need to look at the private sector and see what sort of policies and investments that we can put in place. With all this work that they're doing with the Saudi government and Saudis trying to build agriculture with food security, those are positive steps, but we need to look at how other local investors can begin to invest. So right now, it's not so much about the government budget, it's about the sort of policies that government will implement, especially with trade, investment, and industrial policy that will encourage growth.
I think that's your opening sequence. Let me ask Wally, as far as the exchange rate is concerned, we're stabilizing the naira, but we need to strengthen it. So in terms of the figure, the 1,500, do you think that's a realistic rate to put this budget to life and to make it to deliver? And what more do you think we can do to stabilize and then strengthen the value of the naira? Then we're going to come back to you as to what do we really want. Is 1,500 the new normal? But let me hear from you first.
Okay, thanks. A very strategic question. Now, as you think about exchange rates, you must understand what are the forces that actually drive, the prices, which is your demand and supply. Now, over the past few years, what we've had a scenario is that there's been significant pressure on our exchange rates, which is driven by, number one, default subsidy. In the past, we had our consumption figure to be about 65 to 70 million,
liters per day.
But in reality, based on the fact that we now have a food deregulation, we've dropped that to about 35 million, liters per day. So that tells you that the pressure we have on FX has actually reduced significantly. Number two, the speculative demand as well has also dropped significantly. So within that context, you can agree that the 1,500 is actually realistic given the stability we've seen in the market. But there are risks that the government must be aware of, which we must proactively track and mitigate.
What are some of those downside risks?
So first of all is the fact that if you look across the globe, there are global dynamism that is actually that will impact the prices of goods and services. And one of them is the tariff. Now, as you impose tariff, what you are going to see is a situation where you're having increase in prices of goods and services, which could actually lead into inflation in advanced economy. When that happens, then dollar becomes strengthened and we can become weaker. So the question is, what are we going to do to ensure that we mitigate that impact? That's it. Number two.
And that is already beginning to happen.
Exactly.
Somewhat.
Yeah. Number two is a conversation around the energy drive in terms of energy independence in the US. It also has implications to actually weaken our capacity to hand FX to actually defend the naira. So what government needs to do are three things from our own perspective. Number one, there must be strategic direction to ensure that we continue to sustain the confidence in this economy, which we've seen over the years. So investors' confidence must be sustained. Number two thing that government needs to do to actually mitigate the impact that could come in is the fact that there must be import substitution strategy. What we've seen in the past where we had significant dependence in terms of PMS imports, that is gone. we must be able to say what are the other commodities today that we consume significantly, like wheat that we're importing. What strategy are we going to put in place to reduce dependency on that, to actually strengthen the naira? That will also be very important. The last one is our ability to attract foreign portfolio has increased, but when it comes to foreign direct investment, it's weakened significantly. So speaking to what Mr. Tilewa has said, government must be strategic in terms of identifying those guys that can come into this economy and come and invest in collaboration with the private sector. That must be done in a strategic manner. Yes, we have a new Minister of Trade, Industry and Investment. There must be targeted approach to attract those guys to come and invest there. And once we do that, that enables us to actually support and defend the naira.
Very interesting. Tilewa, do you think 1,500 is comfortable to the private sector in terms of what is in the budget, if they can work with 1,500 as, well, give or take, the naira value, dollar value for the naira for the rest of the year as far as the budget is concerned? Well, is 1,500 the new normal?
500,000 might not even be the new normal. If the government is able to sustain its policies and be able to instill confidence in the economy, we could get to 1,000. There are many things that the government can do in terms of structural reforms that can get the foreign exchange levels back to 1,000. So what is important now is that we do have a very transparent foreign exchange mechanism in the system. So what is important now is that if you talk to some people abroad, they have an app which they will use to send money to Nigeria, and it will give them the rates at the prevailing rate through that transparent system. And it's something that the local bureau de change operators also need to adopt. And we need to have one single market in Nigeria. Not that you have some other people on the side say, oh, we're doing parallel market. They look at the market rates and they want to add a 50 naira or 100 naira premium to that. So as long as government continues to maintain stability and confidence, I don't think that's a problem. What we're moving towards now, because you have a new foreign exchange code, you have transparency in the FX system, the central bank is no longer the major player in the supply of dollars to the foreign exchange markets.
Exactly.
And so what is happening is that the government is actually making money from the foreign exchange market. As the minister said, a lot of the governors have seen their revenues double because now the central bank collects some of its dollars in terms of the federation account, sells it in the markets, and they're getting more naira for the dollar. So what is important for me is price discovery. We now have a transparent foreign exchange system. If you can maintain the confidence within the stability we have now, and the key factor is the fuel price, which is the most significant cost push inflation factor in Nigeria today. We've seen stability in the fuel prices. We need to keep it at that. Everybody now knows that fuel prices can move between 850 to about 1,050, depending on the international price of petrol. We need to keep it at that so that everybody understands that there's that stability and we maintain. So the only thing left in the foreign exchange market right now is price discovery and government stability.
And some liquidity. And more liquidity.
There is liquidity.
We can use more liquidity.
There is liquidity in the market.
We can use more.
You can use
You never say no.
You never say no, but if you want to drive liquidity, then you look at how do you drive FDIs into your markets.
Exactly. That's what we spoke about. That's
exactly.
What
that is now a question of, as I mentioned earlier, policy.
Yeah.
If you now put in the right policies in place, then it's a lot easier now to begin to achieve that. But right now, I think we're at a very, very good level of stability. And what the government needs to do is to put the right policies in place to be able to ensure we maintain stability and, more importantly, growth.
So we know where petrol subsidy and all of that is right now in terms of volume that we consume and all of that. So one of the things that is in the budget was inflation target of about 15% or thereabout. And then you look at issues of supply chain disruptions. You've got issues to deal with within the wider economy and global. But again, we need to have an environment that will help us achieve some level of productivity, not inflationary input into industries and agriculture, and with exchange rate at 1,005 as a target. Will you tell me, how do you think we can get that done this year?
Okay. So inflation is an extremely important variable, within the macro context. There are three main variables that are extremely important. One is your exchange rate, which we've actually dealt with. The second is your cost of capital, which is your interest. The last one is your inflation rate, which is extremely critical. 15%, as I reflect on it and looking at, yes, we've done a rebasing that actually says now we're 24, but in reality, is it 24? Maybe if we had actually been proactive, such that we've been doing it maybe in line with international standard of...
That's the rebasing?
Yeah.
Every 5 years?
Every 5 years. Maybe we'll have known the true picture of where we are. But if we are not proactive in addressing certain issues, I don't think 15% is optimistic. There are certain things that needs to be dealt with. So if you decompose your inflation, you will discover that food inflation is actually extremely significant. Though NBS has been smart, what they've done with the rebasing is to actually split food inflation into two components. So there is the core, and now you have the one that relates to restaurants and the rest.
Hotels and the rest.
Yeah, but if you focus even on the one that is the core, it's still significant. So ability to attack that food inflation is extremely important. And to attack that, you must fix the problem around production. Productivity is actually low. That's one of the major problems we have in this economy. So one is we must be able to attack, our productive capacity, especially within that sector. So we must be able to say, as we look at food inflation, what are the structural issues within that space, and proactively address that by looking at, a value chain analysis. That one is important. I think number two is the fact that I was at a meeting just, last week, and it was very atmospheric, to be candid. What we found in having the conversation is that you empower the farmers to some extent, giving them fertilizer, but as they produce, they actually export some of these things to other countries, not even serving the Nigerian market. So what mechanism do we have to actually attack smuggling? What mechanism do we have in place to actually ensure that there is a price control mechanism, in terms of what comes out? So attacking food inflation is extremely important if we're to deliver 15%. The second thing I think is important is our route to market. You produce, but getting into the market is actually a major problem. So logistics still needs to be attacked significantly. If we can address those two variables, I think we'll be able to move towards something like maybe something close to 2018, but 15% will be a lot of work that needs to be done to actually achieve that.
Quite a lot we still need to do as far as the midstream segment of agriculture is concerned. We have to fix warehousing, we have to fix storage, and a lot of other things there before you talk about agro-allies. So, Tilewa, in terms of inflation, do you think 15%, if we put the entire 55 trillion naira in a box, if we sort of, let's take inflation of 15% of that, how much will be left for all the monies we're talking about into the critical sectors, health, education, even security, healthcare, and social welfare, and what have you? And do you think 15% will be comfortable for industries that will have to deal not just with, stability, some reduction in price of petrol, but again, band A, band B, whatever that is, and a lot of other structural issues we have to deal with, supply chain, logistics within the country?
Well, I think I don't want to dwell on inflation because there are changes that are going on, and I think we need to go by what the Monetary Policy Committee and the Central Bank is doing. I think that should be a guide. And what they've done is they've held their rates in anticipation of any issues. Inflation is a lagging indicator, and I think we all have to wait until the next Monetary Policy Committee meeting, and let's see the direction.
The rebased GDP.
Yeah, yes, the rebased GDP is not really maybe an issue, because if you rebase inflation, the rebased inflation figures was 24%.
Yeah.
So officially, that's what they're saying inflation
So maybe the rebased GDP will give the central bank, money MPC, a better...
No, the rebased GDP doesn't have any impact on inflation. So that's inflation. They've already told us that the rebased inflation numbers is 24%. But the fact is that there is a lagging indicator, so you need to be able to wait and see the impact before you understand the full value of inflation. I really don't think that's the issue. The issue right now is the fact that I think we need to focus more on government policy. The most significant issue for me right now is the debt profile of the government. We have, by the end of last year, our debt profile would have exceeded 150 trillion naira. If you take a look at that, the cumulative deficit over the last 3 years is right now standing at somewhere around 36 trillion naira. And if you take a look at the top 4 items in the budget, which we have, defense, education, and healthcare, you find out that the debt service for this year, which is about 16.3 trillion, exceeds those 3 top items. So debt service is a significant portion of the budget. And what we're seeing now is that the government is technically insolvent because the current liabilities exceed current assets. And the 3-4 years we've had of consecutive deficit financing as a source for concern. So I think government really needs to optimize equity within its capital structure. And what we're saying is that government needs to sell down assets more than what they're doing. And the recommendation we've made is that they should take a look at the oil and gas sector, which is a sector that is on the rebound because of policies. Government has put in positive policies within the oil and gas sectors, and we're seeing the results. In nominal terms, the oil and gas sector grew by 30% last year. 2 years ago, the growth in the oil sector was minus 19%. So there's been a significant turnaround within the oil and gas sector because of the policies. In 1977, we were producing 2.5 million barrels of oil. Today, we're at about 1.3, 1.4 million barrels of oil. So if we put in the right policies into the oil and gas sector, I think we'll derive immediate benefits. And one of the things we're saying is that you need to sell down some of these JV assets. In the process, you can raise about $35 to $40 billion, and then you can use that to plug the hole in your balance sheet, reduce your expenditure, reduce your debt profile, and then use that to improve your cash flows. More importantly, the 2 million barrels that you're looking at a day, we can return to 2.5 billion barrels. And on the other side of the balance sheet, your revenues will come up into the Federation account, which is most critical dollar supply that we need. And in answering some of your questions that you raised that say that, how do we increase productivity? Because we have an output gap in Nigeria.
Yeah.
So one of the easiest things that we need to do is the fact that there are many industries which we've invested in. And since agriculture is this topical one, we have 3 refineries in the Nigerian ports today owned by Dangote, Bua, and flour mills. The production of those 3 refineries has enough to supply the whole of the West African sub-region. That's a very strong African continental free trade project and a potential foreign exchange earner. But unfortunately, these 3 refineries are still importing raw sugar. So what needs to be done is that these refineries, there needs to be a deliberate plan, just as we had with fertilizer, cement, and now refining. Nigeria's refining capacity now is close to 1 million barrels a day.
So crude oil.
Yeah, 1 million barrels a day. So that's important. So we've restored self-sustainability. So Nigerian farmers now need to be enhanced to grow the sugarcane, the industrial sugarcane that is required for these factories, so that we're no longer importing those raw sugarcane. That productivity alone will significantly close our output gap and keep Nigerian farmers engaged.
I appreciate all of that. Thank you so much. Then we take that back to the oil price, because whatever we do, we still need the oil money. $75 a barrel. This one in 70. New York crude, about 66, 65. Not so fantastic. So, what is good news? Some big oil firms are coming back to fossil fuel. BP, Shell, the rest of them. Total Energies. There's a bit of a pullback. Donald Trump will be in office for 4 years. No one knows what's going to happen after that. So, do you think the 75 is enough? What happens? Are we looking at, if you have so much oil in supply, OPEC wants to bring 138,000 barrels back to the market by April. So, are you concerned about, even if we're doing, as we're doing now, meeting OPEC quota and slightly above that figure, do you think if price remain very low, now going around the middle top end of the $60 handle, that this budget that we talked about would not be impacted?
Okay, thanks. Very, very strategic question. So a key variable, as to think about the budget is the crude oil price. I mean, $75 per barrel for 2025. the first question we need to ask is, what are the variables that will actually determine the overall price? And it's an interplay of complex variables. So you have the conversation around, increase in production, which we've seen that US is actually pushing significantly. That will increase supply. The other variable that is also very important is demand. What has been driving demand in other parts of the world has been specifically, industrialization as well as transportation. But when you compare what has happened over the last 1 year, especially in China, where there has been significant investment in electric vehicles, and demand from that market is actually dropping. So you are increasing production, you are increasing supply, but demand is actually being challenged because there are other technology and their movement into electric vehicles. Even in Nigeria, we are seeing some guys, trying to demonstrate, resilience in terms of coming into Nigeria to make investment. So those demand and supply forces will actually have significant role to play. Now, the question is, what has been the forecast by some independent guys? So if you take, EIA, their forecast is $70 per barrel for this year. Their views as even go to 2026, it will drop to like $66 per barrel. IMF has also dropped it to about 74. When you look at Goldman Sachs, they're saying it will be between 70 to around $80 per barrel. So reflecting on this, that $75 per barrel needs to actually be challenged, to be candid, as you reflect on those variables that may likely impact oil price. So as you look at it overall, I think we must be deliberate. Otherwise, the deficit issue that we are speaking to will actually, expand and increase significantly. But overall, I think it will be within the range of about 73 to about, that's $75 per barrel. Government must be proactive to track and put a mechanism in place to mitigate that impact by looking for other sources in terms of foreign direct investment that was spoken about. So that's $75 per barrel within the context of what is happening, and the reforecast, within the global landscape is something that needs to be watched. That's my view.
I want us to move on because of a time constraint. A lot of issues persist, severe revenue leakages. How do we deal with that? Whatever it is, how much of this 55 trillion naira budget will go to leakages, to bureaucracy, whatever it is?
You see, like I've said, I'm not really worried too much about all those things.
I'm beginning to wonder what worries you.
No, what worries me is policy. You see,
yes, policies
policy. Once you have the right policy,
leakages,
leakages, you have a new system now in place. Yeah. There's a new payment system that the government has adopted.
Yes,
which has moved from a private sector one to something that they've developed. For me, those are like positive developments in those areas. What is important is revenue assurance. What do you need to do to be able to sustain look at the bigger picture? If you take a look at the bigger picture, which I've said, selling down your JV assets, increasing your oil production.
But when we sell those things down, we don't want the money to go away.
It's not going away, and that's why you have the budget monitoring. There's monitoring of the budget. That's why you have a legislative assembly, and those are the things that you need to look at. Like I've said, the government's budget is only 15% of our GDP. So there is still a significant amount of our GDP outside of government that the government needs to put the right policies in place to ensure it works. And let's take a look at those policies. I've told you about the policies of ensuring that these refineries no longer import sugar from abroad, that the Nigerian farmers grow them. So if all these Nigerian farmers are going, will create employment, will increase productivity, will close the output gap. What also worries me, as I've told you, is the debt profile of government. And that is why I'm saying that those assets need to be sold down to be able to increase that. The biggest problem we have also, don't forget that the LNG was is suffering from talking about what gas. Other 2 LNG projects back on stream. We need to make the investment in the oil and gas sector. LNG is like 60% completion of its train 7, and it's complaining seriously that it doesn't have gas. So we need to invest in these oil fields to produce gas for LNG to start with, to get LNG optimal, and then for them, LNG is an $8 billion project. So these, and then they're looking to commit to train 8. You know, so these are the sort of investments we need to make, and the potential within the gas. Let's even leave the oil alone. Let's look at gas. Government needs to take a look at the gas strategy, sell down assets to be able to encourage the private sector operators to be able to get investments in gas. Because the goose, you know the dividends that LNG gives to the government every year is significant.
That goes a long way.
It goes a long way. So now, if you do not nurture that goose that's laying that golden egg, that's on the threat.
Okay, good. Let me ask Wally to do this on capital expenditure and how to get the project implementation on track. What are your thoughts around the sectors that should get the most capital investment to drive long-term economic growth? Okay. I'll give you that in 1 minute.
Yeah, I mean, CAPEX is extremely important. So when you take an economy and you are dimensioning it into the various components, so you have your consumption, you have your investment, you have your government expenditure, and then you have the difference between your exports and imports. So that investment is extremely key. Now, the question is, from a government standpoint, what has been done in terms of what Tola did in breaking it down, and which the Honorable Minister of Budget and National Planning spoke about? I think, first, they're in the right direction, focusing on guaranteeing security that will make private sector investment to actually come in is extremely important. We've seen also significant allocation to infrastructure. When you do a deep dive into the budget and try to understand what are you going to spend the money around infrastructure on, a review shows that for power, they're looking at transmission, Now, we must hold government accountable, because one of the problems we have is not even generation capacity, but once you exceed certain percentage in terms of output, the ability to actually will that, to demand center becomes extremely challenging. So if you have in budget, strategy to actually fix that, we must hold government accountable to ensure that that is actually done, and unbundling that and giving opportunity to private sector to come into that space is actually important. The second thing I would say is around, agri. Now, if you look at the budgets, one of the things they've noted there is agro-processing zones that they plan to establish in collaboration with AFDB and some other multilateral. We've been saying that for some time now. It's extremely important that this government takes that forward. You can't take away that boldness from the government, so it's extremely important that we accelerate that conversation in a strategic manner. So I think the
third one.
The third one I would say that is extremely important is human capital.
We're going to talk about that, and that's what my next question. Just check. You checked your blood pressure this morning?
Easy. Yeah.
Easy.
Watch.
You guys are good.
Apple Watch.
All right. We'll talk about health and social. You guys don't need social welfare. So we'll talk about social welfare and health when we come back. It's your KPMG Arise 2025 budget today. We're live from Arise. Yes, 2.5 trillion naira is what the healthcare and social welfare will get in 2025 budget out of the headline figure of 55 trillion naira. Hello, everyone, and welcome back to the show. This is the KPMG Arise News Budget Day 2025. Meet my panel, healthcare. Health is wealth. So let's be introduced to my panel. Dr. Kelechi Ohiri, who is Director General, National Health Insurance Authority. Thank you very much. Good morning. Welcome to the program. And of course, Fola Lauye, CEO, Iwosan Investments. Thank you very much. It's good to have you here.
Thank you.
And the first female on the panel. Thank you very much, Matt. So I'm going to start with you.
Okay.
And don't get jealous. This is it. 2.5 trillion for the budget. How do you consider that size? Is it big enough? Is it large enough?
I think it's definitely a step in the right direction. It's double the budget of last year. So certainly we're very, very happy to see this commitment from the government side. We still have some miles to go, though. We always have in our sights the Abuja Declaration, which is 15% of budget. But we're making great strides in that
Since the
direction.
announcement was made and since Mr. President signed that, what has been the discussions within the healthcare sector, the private sector, what the direction should be for this year as far as budget for the healthcare and social welfare should go? What are your folks, your colleagues and professionals in the industry talking about?
I think it's, for us, it's more than just the budget, more than just the funding, but it's also really the direction, the amount of commitment that and political will that the government is showing, which is significant. In addition to increased funding, there is, of course, some key elements like the presidential initiative on driving the value chain in healthcare, PVAC, which just a few days ago actually has had some major pronouncements of local manufacturing and supporting the purchase of local manufacturers of drugs and consumables. So that is already bringing us, a significant lifeline into the healthcare sector, because we see it as one, obviously being able to help us really create what we call a local system, which reduces costs significantly compared to what we have to spend on imports and tariffs and so on. But secondly, also, of course, it provides jobs and it really creates, some significant, shall I say, mobilization of resources, even from the private sector.
Interesting. You win my heart. Again, because it comes to domesticating, localizing the healthcare infrastructure, the vaccines, everything from syringes, everything that we need locally. And we can do a whole lot. And I'm sure you agree. But what specific outcomes do you think, how much do you think we can deliver from this 2.4 trillion naira from the government?
Thank you very much, and thanks for having me. And I think as Fola mentioned, one element is the quantum. The second element is what is actually directed at. And I think we have a policy framework, which is a health strategy renewal and investment initiative, where one, we're looking at governance. So how do we create more efficiencies by making sure that we all have an alignment? Nigeria has a mixed healthcare system, which means it involves both the public and the private sector. So through a sector-wide approach, what the minister has done is making sure that there's alignment across all the subsectors in the health sector to actually improve outcomes. The second element of that is the pro-poor nature of the budget. The Basic Healthcare Provision Fund, which is a major equity intervention that commits 1% of the consolidated revenue towards the poor, has doubled against last year. I think it was from about 144 billion to about 290 billion this year. And so what that does on the supply side is that it targets primary care, which is the foundation of any health system. And on the demand side, it makes sure that we can provide insurance coverage for the poor and the most vulnerable in our society. Fola has also talked about the PVAC program, where from a policy perspective, we know that we need to unlock, the market potential of the private sector across the value chain. Now, I head the National Health Insurance Authority, and in the last year, we had an additional 2.7 million people who were covered. So a significant part of what we're focusing on this year is how do we expand coverage, enforce that mandate, but also make sure that as we realize universality in healthcare, that the poor are also carried along in the process. So it's not just the amounts, but it's also the clear, intentional, strategic directions to make sure that we unlock the private sector, we have coherence in policy and governance, but also that there's a strong equity mandate that builds from the bottom up in primary healthcare. I think in addition, the other thing that we've seen in the budget is a lot of investment in healthcare infrastructure, whether it's cancer centers, working with the teaching hospitals. And the government recognizes that the government shouldn't do this alone. So it's leveraging other PPP models, such as the Cancer Center, University of Lagos, with the NSIA that has been done to ensure that we can expand this across the country. So that coherence and consistency in policy direction is one of the key things to observe in this year's budget.
How much would you like to see from our overarching healthcare policies of the government to drive technology innovations, to drive public-private partnerships, just about the NSI investing in some of our sovereign wealth funds in cancer and various phases, and then about policy reforms. 2.3 trillion, double that is not enough for 250 million of us. So we need a whole lot more private sector on the ground than what the government alone can deliver. So how much more would you like to see in 2035 beyond the figure, the budgetary figure?
No, certainly it is the reform, it is the policy direction, it is really the embracing of the private sector. In fact, most recently we've been calling it that we are shifting now from just public-private partnership to public-private integration. That how does the government now really work to integrate what the private sector can bring? And we're beginning to see that quite significant steps. Apart from on the local manufacturing side, I mean, Kelechi, of course, even just being here and sitting here with me is showing the collaboration that certainly the need for growth of what I'll call the demand side. We really need to create a healthcare market. I mean, we've seen other countries do it. I mean, very recently we saw what was going on in Indonesia, which is a very similar sort of economy to ours, where they have really gotten to what you call 94% coverage of 250 million people in their health insurance system. Now, imagine that we really have a much more robust health insurance system, which really brings what I'll call risk pools to the table, which brings as many as we can into the table. Then the access is there, and it really works with the private sector in investing, in bringing investments, in creating more infrastructure, in creating more supply, not just in terms of manufacturing, but service provision. Again, of course, one of the key issues we're facing now in service provision is the loss of talent, the Japa syndrome, which has really hit us. But we know that the more there is a market here, the more we can see skills being retained in country. So certainly the policy framework, and of course the policy framework around technology is key. Again, the use of telemedicine, we're seeing, of course, because we have such a strong digital mindset in this government, we're seeing, again, conversations around how do you really push digitization of healthcare and, the data collection and so on. And then don't forget, of course, we've just come out of a pandemic where data was key, of us really being able to be sure that we had a robust sort of healthcare data collection system. So all of that is...
Very interesting. How much of what the lessons from COVID-19, and I'm sure we all went haywire, as it were, and it was as bad as it can get. Then we've got institutions such as the African Union, the Afrexim Bank, and a few others talking about, look, we need to domesticate vaccine production in Africa. Nigeria was selected as one of the, we have a medical center supported by Afrexim Bank in Abuja and a few others. The Center of Excellence, that's what Nigeria was designated, and a pass mark for Nigeria there. So how much of this involving universities to do research and all of that? Are we still onboarding all of that in terms of our healthcare spending for this year and perhaps beyond? Is that still on Dr. Alipati's front burner?
Absolutely. And I think when we reflect on the lessons learned from COVID, there are a few things that came out of it. And I think one was the need to depend less on the global supply chain, and hence the focus on domestication of our manufacturing, of commodities, of supplies, of drugs, and eventually vaccines. It's a bit more complicated making biologics, but I think we're on the right path to that point. But there's a bigger question in terms of when you look at the global health architecture and you look at the dependency that many countries have on global health financing, for instance. Recently, a lot of countries were stunned when the US government had a policy shift and USAID suspended operations, and you also saw other leading donors reduce their overseas development assistance.
How do you feel about that?
Well, first, I think we are grateful for the support they have provided over the years. Lives have been saved as a result of that. But secondly, every country has a responsibility to its citizens. It's a duty we cannot abdicate.
You think it's a wake-up call?
Oh, absolutely. But I
Perhaps
think Nigeria...
we saw that coming, so we raised the budget this year.
Well, Nigeria at least responded very quickly and rapidly. So whereas maybe in other climes, people might still be in shock, in Nigeria, there was a very quick response. The minister convened the team. We did the bottom-up costing. We looked at the gap analysis, and immediately actions were undertaken. First thing was do no harm, make sure that we mitigate the impact, that those that are on life-saving medications do not suffer. Secondly, we looked at the systems that were being created. So things like the health workers, they've all been absorbed. And then thirdly, we're looking for more efficient ways of providing access to services. And it's also an opportunity for us to look at that. And so it's a wake-up call, not just for Nigeria, but for everyone. But I think it's in tandem and in keeping with the strategic direction we are undertaking as a nation, which is that of domesticating the way we actually intervene in our health systems from the demand side as well as on the supply side. And so you can see that coherence. And maybe that's why Nigeria responded much more quickly and more robustly than many countries in the same situation.
Do we still have enough and qualified medical professionals in Nigeria to take care of those that we lost over the recent years to the Japa syndrome? Do you still think, based on industry realities, do we still have those that can step in? Because again, with the challenges we have before, the population is on the rise. We're seeing pressure on public and private hospitals in terms of folks who are there on a daily basis, whether they want to do high tests. A particular individual went to do, an elderly woman went to do a particular, at the general hospital, they said there were 10 folks there before that was to attend to them. That was last week, Friday, there were only 2 left. 8 had Japa. So all the folks who were pouring in had to be attended to by just 2 individual professionals. So do you think we have those who can fill those spaces?
I think
How can we stimulate them through the private sector to come in?
I think what's important is the pipeline, in ensuring that we still have the pipeline of those who are being trained to, continue being trained. We certainly have, several number of medical schools across the country. We certainly have seen, this minister and this government already also begin to work on increasing that. We've also seen even state governments, for instance, in Lagos State, where there is now an up-and-coming university for medical technology and science. So the training pipeline is critical. The training pipeline also at what I'll call the specialist level. So making sure we're getting enough postgraduate training happening in the country is also critical. But the other thing too we mustn't forget is the diaspora that we have. The sheer size of the healthcare diasporans, as I like to call them. And we're not alone. There are many other countries who have been through this, and there are many other countries who are going through this now. If I pick India specifically, India also really grew their own healthcare system by focusing very much on bringing the diasporan Indian doctors from around the world back into the country. And that was, such a game changer. And I believe that we have that opportunity here as well. And in fact, if anything, we have the best of both worlds. A lot of them have trained here, they know the country, they are committed, and so on, and yet have had the best experience globally. So really being able to bring them in and work with also the growth of the local talent is going to be really important going forward.
Very, very interesting point. Dr. The government is liberalizing governance, so devolving a whole lot of things to the local governments at the bottom of the pyramid. Do you think primary healthcare should also be devolved back to local governments to make it easy for folks to get medications, whatever they can get at affordable cost and easily down there?
I think primary healthcare has always been something that's has been implemented at the local government level. Health has been on the concurrent list where typically for service provision, basic primary care is at the local government level, and secondary care at the state level, and then tertiary care at the federal level. Now, in many states, in order to create efficiencies, they had something called primary care under one roof, where the state government and the local governments partnered to ensure that not only is care provided at the primary care level, but that there were effective referral systems to sort of general hospitals, etc. Now, I think it's best practice that care is brought as close to the community as possible, which means that the primary care centers have clear links and they are community-driven, because elements of that will involve health education, outreach to the communities, working within community structures, and the local governments is more equipped to deal with those things in their communities. However, there has to be some accountability and oversight, and that's where the local governments now need to ensure that the facilities are fit for purpose, working with agencies like the NPHCDA. It means that a primary healthcare center has to have, one, the right health workforce. And these need not be doctors. They could be nurses, midwives, community health workers. It needs to have commodities so that when people show up there, the basic essential commodities are there. The service delivery points have to have the basic infrastructure so that people are treated with dignity. And in addition to that, there has to be services in the communities because not everybody will show up at the primary care center. So that is what brings up the primary healthcare system that we have. So I think it's a good thing that we're holding different levels of government accountable for things that they are best placed to actually provide. But we shouldn't look at the system in a balkanized manner. It's one entire system. And so the linkages between primary, secondary, and tertiary also needs to be strengthened. For instance, in the program the minister is driving on crashing maternal mortality, it starts from a woman in the community being able to access basic ANC care. And if there are complications and problems, being able to be referred to a secondary care where the program the government is driving on free access to maternal care means that when you show up with that complication, ability to pay is not going to be a barrier. So that requires synergies between the primary care centers and the secondary and tertiary facilities.
So can we use this model, as it were, with social welfare in terms of not just a bottom-down approach? Well, the big money will come from up, but in terms of how we implement it, we use a bottom-up rather than up-down approach. Do you think that can be done to internalize some of this social welfare so that it gets to the vulnerables that we really determine it to be, and they don't end up in some warehouses? I don't want to name names.
Certainly, it's really important. As Kelechi has said, care, it starts in the community, always needs to, whether it is public health or private health. It always, you have a cough, you have a cold, your child seems to have a fever, you want to go and get the care as close as possible.
And social welfare as well.
So certainly, and social welfare builds into that. Once that structure is in place, once that community structure is really in place, then of course, we still need to work with government in terms of subsidizing care. And that's very important. I know that we have tried in a few ways to see subsidies for care come through, again, the demand side through health insurance, because that's a way of government also knowing, as you said, that you can measure what you're buying, what you're paying for. You can measure, you can see the outcomes, you can see the services, you can see the women, the children, and all members of the family being looked after. So certainly, having the structure in place and then having the subsidies are both critical.
All right. Very nice speaking with both of you. I have a question. I'm proposing to the government that there should be a $50 social welfare given to families in Nigeria every month. And I'm wondering, who should it be given to, the husband or the wife?
You know where I'm going to go with that now? And let me finish the response.
Okay. We know the answer. We know the answer.
Not only because, of course, women are the very much the ones who look after the entire family, but of course because they also look after the children, so they also try to ensure that there's food on the table.
You lost. Doctor,
I totally agree.
Don't protest. Thank you so much. It's good having you here, Dr. Patrick Ohere and Dr. Fola Lauye. Thank you so much. It's good to have both of you here. And discussing health. Well, you got to listen to the next session. And that's tax. The tax man is here. And he's sitting down with Rosa Sodiri, my colleague. We'll be right back. This is your KPMG Arise 2025 Budget Day. We'll be right back, everyone.
Welcome back. We are still live here at the KPMG Insight Center. It is, of course, the 2025 Budget Day. There's been so much already being discussed. We've heard from we've had the breakdown of the budget. We've had the discussion with the Minister of Budget and Economic Planning. We've had the private sector response. We've talked healthcare. Ladies and gentlemen, it's time for taxes. Oh yeah, it's another big one. The need for reform. Just to set the scene here. We've got the Nigeria Tax Bill. We've got the Tax Administration Bill, the Nigeria Revenue Service Bill, the Joint Revenue Boards Bill. The administration, as you know, everything, everywhere, all at once with reforms, reforms, reforms. I've got 3 big guests here. Very much looking forward to talking to them. We have, of course, Mr. Taiwo Oyedele, Chair of the Presidential Committee on Fiscal Policy and Tax Reform. We've got Rasheedat Adebisi, Executive Director, Chief Commercial Officer, CCO at AXA Mansard, big in the insurance field. And last, certainly not least, Mr. Ajibola Olomola, Partner, Tax, Regulatory and People Services at KPMG West Africa. You are all very welcome. I have to start with you, sir, of course. Professor. Because, I've watched all your presentations, your different interviews on the Arise Channel and elsewhere. Nigeria's investments comparative advantage, right? Taxes are not the only thing that companies look at when they want to pick a country to invest in. So this reform bill, how does it impact Nigeria's investments, comparative advantage, when you think about the pioneer tax status and also free trade zones? How does that all come together?
Yeah, thank you very much. I think the starting point will be that the investment climate that we have now today within the tax and more broadly the fiscal system is not conducive for growth. So which means we have to fix that. Despite the incentives, pioneer status, free zone, tax credits, it's not enough. So therefore, if we take a step back and we say, how can we address those issues in a structural manner, rather than throwing incentives at people, which often will not solve the problem? How can you make it a system-driven solution that is sustainable? So in that regard, one of the major objectives of the reforms is addressing economic distortions. Another one is promoting competitiveness. So if you think about the free zone, we looked around the world, and most countries will set up a free trade zone or area with a view to promoting exports, right? You relax the rules around tariffs and taxes and regulations and exchange controls. Just do your stuff and export. So in Africa, a country like Morocco, which set up their own after us, are now talking in $30 billion plus in exports. Nigeria cannot boast of $5-6 billion non-oil exports. In fact, non-oil export as a percentage of total exports is less today than it was when we introduced the free zones. That's one important point. The second point is there are companies within the domestic markets, we call it the customs territory. They are tax paying. So if we allow the people in the free zone to sell to the customs territory without paying taxes, what you're simply doing is you're making it impossible for those tax-paying entities to continue to operate and continue in business. So we thought as part of the reform, we must create a level playing field such that if you operate in the zone, that's fine, feel free to export, and whatever you do within the zone, no taxes. But the moment you are selling to the customs territory, the domestic markets, you need to pay equivalent taxes that the people operating in the zone, in the domestic market, are paying. That's just fair play. And those provisions are actually today supported by the provisions of the law. So it's actually, we are not changing the rules. So we looked at Ghana, we looked at Benin Republic as part of what we investigated. In Ghana, even when you're exporting, you're exempted for up to 10 years. After that, you pay corporate tax even on your exports. You sell to the domestic market today, you pay corporate tax on it. In Benin Republic, that is very close to us, they allow you for 15 years, no taxes. After that, even on your exports, you pay corporate tax as well. So even after our reform, Nigeria will still be more competitive than our neighboring countries and most countries around the world. Pioneer status is an incentive that says you can operate, not pay income tax for up to 5 years, and we see a lot of abuse. Some people will get the incentive and then they start importing and they're not paying taxes. So what we've done now is we've introduced what we call priority sector incentive. You get a tax credit based on your investment that will be validated. So this is now to try and ensure that, one, we are not wasting our limited resources by just giving away incentives. And two, which is even more important, is not to create an economic distortion as a result of your incentives. So those are the things we're trying to address as part of the reforms.
Fantastic. Rashid, let me come to you. The requirement for companies to pay an effective minimum tax of about 15% of profit before tax, some suggest that that could negatively impact insurance companies because your, where you pay that from, your taxes are not necessarily derived from your PBT, right? So what's your view on how that could be amended?
Yeah, I think first is to commend the committee and our professor of tax on all the work that's been done. I think we haven't had this level of engagement in many years. Of course, after then delivering on the policy, the question is how do we ensure that we're not using one paintbrush for everyone?
Right.
So there are technical areas of the industry. The profitability in life insurance is quite different from what you have in other businesses. Why? We have to keep a lot of reserves away. And when the taxman is trying to recalculate, they want to add back all the things that they don't understand. But realistically, we pay debt claims. We have to put away money for long-term risk, annuity, which means that we don't know if the person will survive 30, 40, 50 years, but we have to assume you'll be here for 60 extra years. So imagine if all of that is being then put to a compulsory tax of 15% just because we want to do that for every company. That, of course, could also affect companies that are also startups. So we believe that 15% is fair. We're not fighting that. We're saying, let's adapt it to different sectors. Let's understand the technicality of our sectors. Let's take away things. The existing law has been amended over time, supported by people like KPMG and, of course, Taiwo in the past, where we have, we look at investment income. We back out expenses. And even in many instances, we're actually booking losses when you look at it tactically, because it's a long-term play. We're meant to be investing for the future. And because we are the safety net of the industries that we all want to encourage to grow, it's very important that we put in the right processes so that we actually attract more investments. And the industry and our regulator, we're actually working together to try and deepen the sector because, insurance penetration is another debate. So if we throw these taxes at us, then we're actually being discouraged to actually go out and run. So I think the focus is to support the sector, to make sure we run so that we can be the true safety net. Every time it's always the government giving people money when things go wrong. The job is that of the insurance company. So we need to make that behavior change happen. So we believe with the right tax support and making sure that it's ingrained there so people don't interpret it as they wish, because uncertainty has been a big challenge for us.
And just to give the good news is that it's always good to engage. So there's partly the trust issue in the system because the issue that they have raised, which is valid, but it's only valid because of our context. Somebody will take the law and read it the way that it's convenient for them because they have the powers to force it to pay taxes. So trying to put that clarification in the law is actually good, so everybody can go to sleep and focus on doing their business. So the bills are no longer within our power, it's with the lawmakers, but we have now proposed to them to consider amending the law to include a language that states specifically that this is profit that is to do with their own investment as a business and not the investment of their policy holders. So we are positive that that would succeed. If it doesn't, we have a plan B, which is that once the laws are enacted, we can then work on a regulation that says this provision of the law, this is how it will be implemented. And we can then provide that clarification there. So I think you have nothing to worry about.
Very exciting news for myself and the industry. Now let's see it happen.
Fantastic. KPMG bringing the private public sector together and working out taxes right here live on Horizon. It's fantastic. A solution. That's what it's all about. Ajero, let me come to you. The matter of the amount of agents collecting taxes. The bill, of course, looks to reduce that. Not just at the corporate level, but also for SMEs as well. I feel like Taiwo they can jump in on any of these questions. But can you speak towards the importance of that, of reducing those agents?
Absolutely. So firstly, I'd like to, of course, commend Taiwo for the very quick response to Rashidat's commentary. And it just gives confidence and trust, like he said, that if you engage with the authorities, they are sensitive enough to recalibrate. And the issue of harmonization of tax collection points is one that has been critical to the Fiscal Reform Committee. In fact, it has been a recurrent issue. But in this iteration of the bill that's been put forward, there's been an initial attempt to harmonize collection points. If you think through the complaints people have had around multiplicity of taxes, and also the habit that we have in passing legislation to earmark. So you have Nigeria Police Fund, earmark that to a certain tax base. You have the Tertiary Education Fund, earmark that. So we love earmark taxes. So what the committee has proposed and what the tax bills show is a reduction of that, aggregate all earmarks into a single 4% development levy, and then taper that down between today and 2030 to ultimately arrive at, say, 2% of total earmark taxes. That will be a profound achievement, and it's the direction of travel that's to be commended. So again, credit to them for coming up with that idea, and I hope it survives the legislative review that's ongoing. The question, of course, will be how do you ensure that future legislatures do not feel the need to create new earmarks, right. And of course, that has to be a continuing conversation, and that's at the federal level. Now, the greatest problem of multiplicity is at the state and local government level, as Taiwo himself has had cause to say on national TV a few times. And for that, they've proposed to, if you like, reimagine the Joint Tax Board and also a platform for dialogue and cooperation among states. We've seen that happen in other countries. In Germany, for example, there's a framework for the states to collaborate and adhere to federal guidelines around taxation. We've seen that also in the US, even on things like what we call VAT and what they call sales tax. There's a uniform model that states have to adhere to, and then states pass individual laws. So for JTB, I hope that some kind of guidance will start to come around what states can do. So for example, you don't want to be paying, if you have to travel between here and Abuja and crisscross 5 states, you don't want to be paying radio license in every state to pass through. So if you paid it once in one state, will other states give you a pass? Ideas like that can begin to come through. So in other words, the job that the committee is doing is not yet completed. They've taken a first stab at it, and we like the direction they've showed us, and we will encourage them to stay committed till they get to the final line. Because that's where, especially the manufacturing sector, if you think about the guys who are producing in their factories, all sort of goods that are then moved across the country, that multiplicity is killing them right now. And that has to be harmonized.
Yeah, indeed. So we're committed to that process. And I can also say Mr. President himself is committed, as we have seen, because it takes that level of leadership to say we need the reforms. We can talk about tweaking it, but let's not negotiate whether we need to reform the system or not. And Jibola is right. So we have the multiplicity of laws imposing different taxes and requirements. You have multiplicity of taxes and levies, and then you have multiplicity of agencies collecting those levies. In some cases, we have legal taxes, i.e. they are legitimate, but they are collected illegally. And then, of course, you have so many illegal taxes that are collected by states and non-state actors. So it's a big issue. But if we take a step back again and you say, what's the incentive for this? The incentive is there's a lot of leakages, and then it creates the opportunity for corruption. So most of the guys that you see on the road stopping vehicles 1,001 times are not doing it because they love to collect revenue for the government. That's why people pay so much taxes, but the revenue government collects is so little. So there's a disconnect that we have to address. One of the ways we're addressing that is, first, the tax reforms would outlaw cash payment for any tax or levy whatsoever. In other words, any tax or levy you cannot pay using USSD or bank transfer or bank card, right? If you do not have a phone and you do not have a bank account, you should not be paying any tax. So that takes away the incentive to collect that money and divert it. That's step one. Another important reform factor is the tax ombudsman. The reason why somebody will stop you in the middle of nowhere and make you pay is because they have more powers than you. They have the powers of the state that they're misusing against you. So the logical and commonsensical thing to do is pay and move on and then complain after all. But once you get to your destination, you're bringing yam from the north to the south, and you have to pay 500, 700K, more than 50 stops, you're going to add it to the price of yam. That's why even the urban inflation versus the rural inflation for food is more than 400 basis points. So that explains it. It's not all diesel and bad road. So with the ombudsman, you don't need to speak Queen's English. You don't even need to speak English at all. Yeah? You have a number you can call, you can text, you can write, and then the power of the state is now here to defend you. That's another important point. But the other one is, since I said we have many laws, we're trying to harmonize the laws. We have many taxes, we're trying to harmonize the taxes. Maybe there are just few taxes. The confusion will be eliminated such that I know the taxes I need to pay. There are 1 or 2, and I've paid them already. And I can show you on my phone. Jibola is right. This will be a marathon. It's not something that will happen overnight. What we're starting with now is a legal framework. But we know we have to work together collaboratively to get this to happen. It has to happen for the sake of our country. We're very optimistic and we're committed.
Fantastic. I'll stick with you. So we've got this, and you talk about this a lot right here, and this was, the breakdown. Our rates, low tax rate compared to peers, right? Nigeria compared to South Africa, Kenya, and so on. The widening of the tax net, in order to maybe bring that up. It's been, discussed that if you've got business A and business B, business A, self-identifies, they are subject to audits, visitations, they're out there, they put themselves out there. While business B stays in the dark, doesn't have to. How can we harmonize that?
Excellent point, Rotus. So we have succeeded in creating a system, maybe inadvertently, or it evolved over time, such that today we punish people who are trying to do the right thing, and we create incentives for those who are doing the wrong thing. And whatever you reward in life multiplies, right? So we should not be surprised that we're where we are, but we need to fix that. So how do we fix it? First, if you show up to the taxman, you've now reported yourself. They'll come and audit you again and again and again. There's also the mindset that it's not possible for a taxpayer to be fully compliant. How can I come for an audit and leave you without an additional assessment, right? If they can't find anything, they will stay there. In fact, I had a session before with executives, and this really, hits me very hard. When I was done with these executives, some of them came to me and said, I like your passion about Nigeria, doing the right thing. And he told me he lived all his life in the UK before relocating to Nigeria with that mindset of we need to pay taxes correctly. He was paying taxes correctly. The first audit came. It was from the States. And they stressed the living daylight out of this guy. He eventually agreed to pay a liability that was not due. Guess what he did? He instructed his CFO. He said, from now on, when you finish calculating PAYE, you remit 75% of it. The accountant said, but we're going to pay penalty. He said, I will pay penalty and interest. Don't worry. But at least when they come, they can find the 25% and they can let me be.
Right.
That was, for me, that was hard hitting. Yeah. Because we are damaging the system. What we've tried to do here now is to say, why are we waiting for someone to report themselves so we can audit them? Why don't you connect the intelligence within the system to build a system that tells you what people are doing? We want to get to a point in the next few years where the tax authority will not ask you about your income. They will tell you what your income is, just for you to confirm. So we call it pre-population of tax returns. And it's being done already in Africa. Nothing novel, nothing out of this world. Then the second thing is, we have designed as part of that, of the tax reform, to make it more expensive and costly to evade your taxes. I'll give you 2 examples. If you buy this phone and you did not pay VAT on it, by the time you want to claim a deduction for corporate tax purposes, the system will reject it because this item is liable to VAT and VAT was not paid, it was in charge. If you imported it, you have the incentive to under-declare so you don't pay the right amount of import duties. On the other hand, when you get to the FRS, you want to claim all the capital allowances and deductions, you overstate it. The systems are not speaking to themselves, you get away with that. Under the reform, that will no longer be possible. In other words, we want to expand the ecosystem of who is paying taxes. By the way, this is a conversation that is much beyond generating revenue. It's about creating a level playing field. If you are the good guy, we're operating in the same sector, you pay your taxes, I'm not paying my taxes, I'm getting away with it. You know what? I have between 30 to 40% to play around with. If I don't like your face, I'll price you out of the market, I will dominate the market, and I'm the bad guy. We should not create that system. So these reforms are also trying to address that.
Fantastic. Rashad, you were nodding your head enthusiastically. Are there any other pain points that
You
that
can
businesses
imagine. I mean, Taiwo just talks about people becoming intentionally misaligned with the right figures, but it's the time and the effort and the multiplicity of people that come and visit you. In companies, you have to put in place huge teams. You have to have tax advisors. You have to have the good guys. You have to have the hard ones, depending on which type of regulator or tax person you are dealing with, because they're the really ones who needs to be really well touched up and educated, and they need to go low down in some instances. So it's very painful for us. It's expensive, and it's not encouraging. And some companies, imagine for large corporates as well, where we seem to be the target, because people expect that you just declared your quarterly return figures on the stock exchange. Oh yeah, we need to collect some of that. Like, is it available for collection? I mean, there's a reason why we're all in business here. We have everyone else involved. So we're not seeing that extending to certain people, as you say, depending on whether they're in gray area or in the light or even in the dark in the sector. We also tend to see this question around interpretation of tax laws by whoever comes to visit you. So they can interpret something that was already reviewed years back and charge you. And then they'll tell you it's MPR. MPR today is 27%. Maybe this time then was maybe 12 or 11%. And you're going to be charged on that, not because you intentionally try to do that, but it's a matter of interpretation. And in the end, companies just want to be compliant. We need the clearances. We need it for business. We need to do things. So one way or the other, you find a way to find a compromise situation. And it's very painful for all of us. We also think the point on enforcement, we can't wait for these things to come up, but enforcement can be done easier. We're looking for things like the TIN number for people, for vendors. It's really difficult. Imagine if TIN number was easy to validate the way you could do a BVN and your NIN. We still don't have that level of transparency and information. And yes, we're told you can just call someone, you can book and go and speak to ombudsman, but that itself is not as encouraging, because in the end, you might feel that there is more punitive nature. So people in the end keep some money to try and take care of whatever extra is going to come forward or not. So I think, transparency, digitizing certain things, making it a lot easier, simplifying. We're all looking forward to this elimination of 50 types of different taxes that we're paying. But I'm not sure we're fully aligned on the SME side. On the SME side, there's still some things missing, and this is really where it will be great to see some more actions. I think I love the fact that we have lower, we've raised the threshold, so lower taxes, so perhaps a much more incentive, but we're still going to struggle a little bit, I think, until things are being implemented fully.
All right, so as it's been said, it's a marathon, not a sprint. Ajima, let me come to you. Should Nigeria be mandating a annual tax payment report from companies?
Well, it comes back to what Taiwo and Rashidat have also been saying in terms of creating a level playing field and introducing more transparency. And we've seen this happen in Europe, for example, where there's been a mandate to publish your tax figures. Tax transparency is a big thing in some European countries now. And what then happens is that it gives an incentive to companies to actually disclose their level of tax compliance, also their contribution to the national economy in which they operate. And so you have people voluntarily providing that information at the same time as they publish their financials. And so the public can see, and you can decide if you want to put your money, invest or buy stock of an ethical company that's also contributing to national development, or if you want to give your money to cowboys, as we speak. So it's one more lever along the road to transparency and creating a fair playing ground for all operators to operate. And I'll just add onto that one more idea around what both Taiwo and Rashidat have spoken to, which is the path to digitalization. Because if you think through it, since 2019, when the journey of tax reform started actively in Nigeria, there's been a progressive movement towards infusing digital ideas into the tax reporting framework. And if you track it, 7-8 years ago, annual tax collection used to be around 4 trillion, 5 trillion, 6 trillion. I remember when FRS achieved 6 trillion, we were all popping champagne in Abuja. Oh, we hit 6 trillion. Guess what? 2024, FRS achieved 21 trillion on song. So it tells you that simply introducing technology into the protocols for administering tax, which also makes things more transparent, reduces areas for judgment and for the kind of interpretative disputes that Rashad mentioned, that tax is one that leads ultimately to a much more efficient and effective system. And I'd like to encourage the committee to also take steps to crystallizing that a bit more in the tax framework, because our tax framework currently is still around the self-assessment stage. We all have to assess ourselves. But Taiwo was mentioning the fact that some of this information can be preloaded. And in a sense, as you're about to fill your return, the system can tell you already what element of your tax return should be. Now, that's moving away from self-assessment into sometimes mandating it. So that has to be harmonized, and that's the direction of travel.
Yeah,
You've praised Rwanda a lot on this, right?
Yes.
Okay, you want to talk about the tech?
Yeah, no, indeed. So very valid point. So in fact, if you look at the tax bills carefully, you see we've been very intentional in the direction of travel with technology. So first, for example, we have tax ID. So you know TIN. And the tax ID has a definition such that, in fact, this would be as simple as asking for somebody's mobile phone to know their tax ID. Because your mobile phone is unique, right? And it can be linked to your NIN, and NIN is linked to everything else. Mm-hmm. So it will be easy for you to validate. The other thing is, in the whole system of who should I audit, what we're doing now is just throwing stuff in the dark and hope we catch one or two people, right? The taxman comes to you not knowing what to ask. They have a standard list that sometimes looks very, extensive, like using a hammer to kill a fly. We're going to be doing what we call risk-based audits. So you buy this phone from me and you overstated it. It's linked to the person that sold to you. If the person has not overstated their sales, the system will flag it. So that's the person I will audit. So that will mean that the pressure will be less on corporates like Rashida's businesses trying to do the right thing. So the other important point is we're also doing an intelligence thing that connects everything together. So the self-assessment that Jibola mentioned is still there, but we also have included the definition somewhere, almost like an assisted self-declaration. So each time I go to the mall, each time I make a call, each time I buy a car, I register with the state, I build a house, I have to connect with electricity. So there's data points. So we are linking that data points together. You have a property, you collect rent, the rent goes to your bank account, the system picks it. So before you submit your return, it's pre-populated with that data. If you choose to ignore it, you have to then justify why you have more compelling data than the one on the system, which you must prove. So we think all of this will help us, on one hand, to determine who is it that is poor and needs to be exempted from paying taxes. Small businesses, who is small business? People say, oh, people will lie that all their businesses are small. I said, the system will find out. Because you're not selling to yourself, they're third parties. We do third-party validation. So we know who is poor, who is small, so they can be exempted. And we know who is not so poor, so they can pay their taxes.
Look, I want to round off with that, and I'll end with you. So many more questions, though. So around the debate around reducing corporate income tax and raising VAT, some say, well, corporations will pass that on to shareholders, a minute figure. Meanwhile, VAT would be, technically increased across everyone. So where do you fall on that, on some of the pushback there?
So this has been one of the most difficult to explain. It's painful, honestly, that I think there are people who understand it and they refuse to demonstrate that they understand it. For VAT, and I hope nobody will misinterpret what I'm saying now to mean that we are rejecting what the governors asked us to do. We are not rejecting it. I'm just explaining in response to your question. So we said, what is it that people are consuming? Particularly the low-income earners and the poorest people that are in multidimensional poverty. And they spend nearly 100% of their household income on food, on health, on education, on rent, and on transportation. And the plan was remove VAT from all of this. In fact, for many of that, will be zero rated. More than 60% of the consumption will be zero VAT. What zero VAT means is there's no VAT on the product, and the person producing it, if they had to pay VAT on anything, they will get the money back from the government. That's significant reduction in prices of those items. And then the rest of us, there are things, there's a pattern of consumption. If you use your phone, for example, a very poor person in Nigeria will barely spend 200 naira in a month. Most of the time, they are flashing you. You answer them when you get so angry, right? Yes. You'll be angry with them, but at least you listen to them and they'll speak. Yeah. So if they have to pay higher VAT, that's another 20 naira a month. It's painful, but then they're reducing VAT on many things. The rest of us who spend 50,000, 100,000 on the phone are the one who will bear the brunt of that higher VAT. So it's meant to be progressive. In fact, businesses under the reform will get full credit for any VAT they pay on services, on assets, and on inventory. There's nothing to pass to anyone. Because in fact, today, many businesses have to bear their VAT, so which they build into their costs and they charge it to their customers. Under the reform, they will get the VAT back. There's nothing to pass. In fact, manufacturers have over 1.5 trillion of unsold inventory. What we expect rationally will happen is they get a reduction in their cost, they'll pass it on to their customers so they can sell their inventory. But many people have refused to understand it. They said it will stoke inflation, Nigeria will do this and do that. The governor said, I agree with them.
I could continue this conversation for another hour, but we've run out of time. Very informative. Mr. Taiwo Ilele, Rasheedat Adebisi, Adiba Olomola, thank you so much for this fantastic conversation on taxes. Really appreciate it.
Thank you.
All right, after the break, the conversation continues on. I wish I was doing the next one, but Boston is doing it. Power, electricity. The lights haven't gone up since we started, which is great. It is, of course, KPMG Arise News, Budget Day 2025. We'll be back after the break. Stay tuned.
All right, we're back with the KPMG Arise Budget Day 2025. I am Boston Amafai. Let's continue with one of the most critical sector of the Nigerian economy, power and grid decentralization. We've seen a number of collapse times with the national grid, but this is where investment needs to come in, and the government is really interested in doing that. Since the new administration came into office, we've seen the decentralization of power, state governments now empowered to do all that they can to bring more electricity to the people and help to industrialize the country. So the budget has a lot on the area of electricity, a major cost for both the government and the private sector. Let me introduce my panel, and I'm going to start from our landlord here in Lagos, and that's Dr. Faud Animashan. It's good to have you here.
Thank you.
Thank you so much. And of course, one of my panelists, Wala Joseph Kondoti, CEO and Managing Director, West Power and Gas Limited, and of course, Martin Zaroge, who is the partner in charge of KPMG Tax, Energy and Natural Resources. Quite a lot.
Thank you very much.
But let me start with Dr. Faud, because Lagos State is a state of reckoning when you talk about Nigeria's economy. So you folks attract the biggest investments, and 20 million plus of us here live in Lagos. So how much progress is Lagos State making in power deliverables?
Thank you very much.
Very
for that
simple.
Question. There's so much that's going on. In trying to put all this together, I think it's been a lot of challenge based on what we know was going on in Nigeria. Of course, the Electricity Act was passed in 2003 by the president, and then in December 2004, Lagos State passed its own electricity law in 2024. So basically, the law which stems from the Electricity Act opens up the market to state participation as a regulator to manage the entire value chain of the power sector. We're talking from generation, transmission, all the way down to distribution and the retail end. To that effect, the law also enabled, established the Lagos State Electricity Regulatory Commission, which I head. It also changed the Electricity Board into the Electricity Agency, which is an implementation arm of the state. They deal with street lighting and so many other installations. And then we created a fund also. This fund is also to support whatever initiatives and customers within the market.
Currently, we're setting up the regulatory agency, and what we're trying to do right now is create regulation. Now, regulation alone is not going to solve our problem. We also need to attract investment into this market. On the federal government side, a lot has been done to support all the states. They've invested, they're investing about 2.1 trillion naira in this. Of that, transmission will take a major chunk of this, which is about 463 billion. Renewable energy will come after that. It will take about 430 billion. And then the distribution side will take about 305 billion. Why do I talk about this? It affects all of us in the country. So if you bring it down to ours in Lagos State, we've done what NERC, that is the national regulator, has told us to do. Yeah. So basically, immediately you set up your law, you write to NERC, they write to the DISCOs to set up their subcos. Setting up their subcos, those are the ones that we're going to be in charge of. So basically, you have the intra-market, which the states will deal with. You have the cross-border, which they will deal with, and then interstate they will deal with, and they also deal with the cross-border. So the two DISCOs have set up their subcos already. We've started engaging with them, which would be one of the crucial things. But having said that, the biggest problem that we're going to have is obviously the infrastructure deficit that exists. One thing that I must mention is, one thing we've noted in the budget is there is no real amount for subsidy in there that's been provided for tariffs. Now, we know NERC created band A to E, A being the highest, and obviously based on income strata, it goes all the way down to E. Now, you not having that means the whole idea is for us to take over and also take subsidy on top of us, of what we already have. This is one of the issues that I hope we'll be able to discuss further, because it's going to affect how we transit into taking over the market. So at the moment, we are going to call in all the market participants in Lagos to come and register with the new regulator. We're going to, after that, have a discussion with them how we want to develop this market. So we want a market that's going to be run cost-reflective tariffs. That means we're not hoping to add subsidy unless we have to. And they have to be targeted. We have to make sure that this subsidy, we can actually identify who is going to benefit from this. So we want to start with a cost-reflective tariff because investors need to earn their money. If you keep tariffs very low, you chase away investors. But the customers are very happy to see that. Now, if we continue with that, that's what already exists in the country. And we're not able to get enough power anyway. So we want to systematically, the approach that we're looking at, we've added into the Lagos State law something called the regulatory sandbox. Now, the regulatory sandbox is supposed to give us a period at which we want to test some models in this market. While we test that model, we're hoping that NERC gives us a bit of time to do this. And I'm saying this because of this tariff transfer to us to determine. Now, we need to look at the market. I'm going to take the highbrow areas. I'm going to take the low-end areas. I'm going to try and look at what actually works in those areas. I'm going to try and ring-fence them. When I ring-fence those areas, I'm going to test models in there. I'm going to test tariff. I'm going to test supply. Our approach will also be driven by service. Service delivery is crucial. Because if you have the service, and I mean you supply the right kind of power, you will it on either the transmission or the distribution, you meter it appropriately, you also make sure the wires are well fixed, the transformers are done. I have to be able to do that in such a way that when the customer is paying, it goes back to the entire value chain. If it doesn't go back to the value chain, we're doing the same thing we've been doing all along. So in my regulatory sandbox, I'm going to try and test that. And testing that, I'm hoping I can do it for 3 or 6 months, because I need to tick out some things to be able to understand my market better. I'm not going to rush into this as much as everybody wants us, because I'm already getting calls, oh, can I come and register? Can I come and do this? I'm trying to do it in a systematic way with my team that we reduce the amount of mistakes we make. We don't want to rush into this and have to go back into the same problem all over again. So we're hoping that people will give us enough time to do this. I'm not sure the regulation allows us enough time, but I'm also hoping that we will be able to liaise with NERC and also try and find a midpoint where they will understand what we're trying to do, and then they can give us that time.
Well, sir, thank you very much, and then quite a whole lot of you, because I'm sure every other state in Nigeria will be looking at Lagos, whether we like it or not, to say, look, you folks are the poster boy when you talk about the country, so we want to see what works in Lagos. But let me go to Martins in terms of, it's been roughly 12 years since we ticked off the electricity transition arrangement going to private sector. What's your assessment of our journey so far?
I think it depends on where you stand and how you want to look at it. If you look at the numbers and focus primarily on the numbers, it would look like we've made some progress. People will tell you that at the time of privatization, without taking into consideration the NIPPs, we had probably about 5 generating companies. Now, if you look at all of the IPPs and the NIPPs that have come on stream, you're talking probably around 28, 29, 30 generation companies since privatization. So that's a good number in terms of increase. If you look at the rural electrification and the work that we've seen in the mini-grid space and renewable energy, and the number of mini-grids that have sprung up in very far distant areas that didn't have access to the grid, but now have some sort of access to power without being connected to the grid, you would say that we've seen some progress. If you look at in terms of even capacity, as at the time of privatization, the total capacity, grid capacity was somewhere around 6,000 megawatts. Today, it's somewhere around what we are told that the installed capacity is somewhere around 13,000 megawatts. Again, it's some progress. But I think if you ask the average Nigerian whether they've seen improved power supply between 2013 December and today, I think the jury will be out as to what that answer would be. And I think that's what's most important, ensuring that people see that tangible difference. And I very much doubt that we've seen it. And the reason is in very, very far-fetched. We've also had a space where we've not seen the level of consistency and stability that would probably generate the right level of investments. With all of the talk around increased generation capacity, number of players that have come on, we've only added one major grid-level generation plant, and that's the Azura plant over that time. And that's something. I listened to Dr. Fuad talk about the regulatory sandbox and all of that. And the question I asked myself is, would it provide the level of consistency and stability that is necessary to encourage and incentivize investors? Will people be able to draw up a financial model and say to themselves, this is what I expect if I invest in the Lagos State electricity market, knowing that there is a sandbox somewhere where things might change for 3 months, 6 months. So I think that we need to find a way where we bring a bit more stability into the market, a bit more stability into the sector, that will then be able to give investors the confidence that they can come in, put their money in, and see real progress.
Mr. Doty, do you think we're still in a transition? Do you think we're still in transition?
Yes, I think we're very much still in a transitional... In the energy sector? In the energy, definitely. I mean, when you talk about the reform we just had recently, like Dr. Fuad spoke about, which was the Electricity Act, it was a game-changing act, a game-changing order. And so that has relatively changed the industry. And definitely we are still transitioning from that centralized system to a decentralized system. So we're very much still in a transitionary electricity market stage to that extent. Yes, an order was passed a couple of years indicating that we should go to a full-fledged competitive market, but we've not been able to achieve that if we look at that realistically. Remember that recently there was an order issued by NERC that we should start bilateral discussions, which is when the distribution companies can engage the generation companies to buy power directly away from NBET. And so NBET was supposed to fall away. But that particular process has stalled. So for me, we're still very much in transitionary stage, and we're still trying to get to the competitive market. It's getting a bit complicated with all of that, especially if you're saying we have shortfalls we still need to deal with. Yeah. That can never, ever support a competitive market. I mean, but looking at the budget today, and that's what we were discussing earlier, and we don't see any provision for subsidies. But the tariffs actually recognize the existence of a subsidy, of a shortfall in the market of about 399 billion as at February this year. So it's increasing every month. Lagos alone has about 100 billion in terms of tariff shortfall. So there's a lot to deal with. As long as there's a shortfall in the tariff, we are not in a competitive market stage.
Martins want to see, from KPMG, want to have deals for those who are going to bring in money into this Nigeria's power sector. I'm sure Lagos State is looking for those investors to also come in. And you as an operator also want investment. And what I've heard from big names such as Amia Power and a few others is that not just in Nigeria, but across Africa, we haven't been able to deal with the greed. So when KPMG put this as one of the topic thematic discussions today, I was very happy that greed decentralization is a major issue. That was a major discussion from the African Energy Summit, which was held in January in Dar es Salaam. It's all about how do we get African governments and those involved to get the private sector to come in there. One of the problems they mentioned was bankability and the assurance and the guarantee that they want the financial services industry, maybe a guarantee company, partial guarantee as it were. So I was happy that you got Infraco listed on NESD last week or so we can get the kind of comfort that they want to see. Because right now they are scared, and I'm sure you have this concern about if you go into the project today, I'm sure you hear that also from clients, will they be able to get the money, the return on investment? So how do we provide this comfort? Regulation is very important. Framework is very important. But we can't stay forever on that. We need to attract this money, and these investments are going to other locations across Africa. Nobody's going to wait for us. I'm sure we all agree on that. So what more would Lagos State want to do very quickly to attract and retain these investors who wants to go into this key area? Because if you ask any Nigerian in the last 24 months or thereabouts, it's going to be grid collapse, grid collapse, grid collapse, unless on the side of the discourse.
Yes. Okay, so one of the things we're looking at in the short term, so we've created something we call the CLEM, the Clean Lagos Electricity Market. Our plan is the major fuel we want to use in there is natural gas. But we also want to bring in renewables. We want to look at possibilities of hydro, though we don't have so many waterfalls in Lagos, but we want to look at different technologies. We want to be very diversified. Having said that, we are hoping to create a system operator, an independent system operator that will have a market operator, that will have a network operator. Now, the market operator, which will be the settlement side, we want to involve the players in the market in this. Again, like I said, we want to have cost-reflective tariffs, so we want to avoid subsidies as much as we can. Now, this market operator that we're talking about, I had a discussion with one or two of the discos in Lagos, the subcos, and they were asking me, how do you provide guarantees for me? And I said, look, providing guarantees for you is not really the biggest concern for me. It is a concern, but your service levels. Now, take, for example, somebody, I have a provider from Genco. It provides me power. I put it on an independent network in Lagos. Okay. It gets to the customer pays. That means I can pay the value chain. Now, the only problem within that value chain is if either the money is paid and it's not getting to the value chain, or there are leakages. I have ATC&C, that's what we call it, aggregate technical commercial and collection losses on the network. Wow. So I'm trying to reduce this to single digits. That means the infrastructure must be at least 95% enough to deliver power. That is why I mentioned the sandbox. The sandbox, I need to be able to take out certain things. And I say, look, if you're coming onto the grid in Lagos, you have to give me this amount of reliability. You have to give me this amount of affordability for my customers. Before, the play in Lagos was you would go, or to most discos, you would go to the disco and say you want to provide power and this and this. And the disco, for one reason or the other, will tell you no, or something will go wrong. I'm changing that narrative. First, you come to the regulator. You tell me what you want to deploy. I look at the cost of what you want to deploy. I look at the technology. I look at so many things there. And then I look at which part of Lagos this would fit into. I look at the kind of customers there. Does this tariff meet the kind of customers I'm looking at there? Because we know not everybody will be able to afford gas-powered initiatives. When I look at that, then I tell you, okay, either you're going to the subco to do this because you're on the network of the subco, or we take an REA kind of approach. You franchise out the area. Yeah. Because this, if I put this on the grid, it's not going to meet the obligation of the grid as a whole. So I ring fence an area, and I either deploy renewable energy or I find another kind of technology that the customers can pay for. But I would have enumerated the customers. I would have known the kind of income strata I'm dealing with. So I know what I'm looking for. I need to do this because whoever the investor is, if you want to bring in renewables, if you want to bring in gas-fired, you have to know that these guys are going to be able to pay. So I must have enough data to show you and tell you, oh, this and this might work in this area, so let's explore it because you fit into this customer strata.
Okay, it's a very interesting point. Martin.
I think there are two elephants in the room that we still need to address. I think the plans are very, very great. But if we don't deal with those two elephants, we probably would struggle. And the first one is this. If you talk about gas, and then you talk about cost-reflective tariff, if you're going to do an embedded plant today, you probably would arrive at a tariff that is more expensive than the current Band A tariff for it to make sense for any independent investor. Now, if you look at the power sector in itself, one of the issues we had in the past was when we had MITO that was supposed to be reviewed periodically, and for political reasons we didn't. Yes. And then there were the questions of what happens first. We increase the tariff, and then people collect money, and then they're able to invest in better infrastructure, or we ask them to go find money somewhere, invest in better infrastructure, and then earn the right to increase tariff, the chicken and the egg situation. Now, you are probably going to end up in a scenario in various states where, because you want to be able to attract investment, you need to take up the tariff first. And then you'll be asking residents to pay more, even though they haven't seen improved quality, but trust that there will be improved quality. I think that there is a political situation there because of power, whether we like it or not. It's not just a business, it's also a utility. So states will need to be very, very creative how they manage that situation. And then if you then say, oh, I'm going to ring fence an area and get people to invest in getting a franchise. The question I would ask if you come to my area today is say, why would I enter into a long-term PPA with you? Because it's cheaper on the grid. And if the grid gets it right, even gives me 20 hours power, then I'm better off than enter into a long-term PPA with you. If I don't enter into a long-term PPA with you, then your project is not bankable. So states will need to be very, very, very creative.
Would you, in just 30 seconds, well, I'm giving you the final shot. What do you say? So Lagos doesn't have the water to do whatever. So should Ogun State help Lagos, put it all up in Ogun State that has so much rivers and whatever, and push it to Lagos and they go to partnership?
Yes, I think it's it's something to explore. And that's one of the things I would definitely encourage is for states to collaborate. Not just stand alone, but collaborate as much as possible. Lagos does have a lot of water, though. I mean, I'm not sure relative to Ogun State, but I think Lagos does have a lot of water.
we have behind one.
So I'm sure there's some areas that we can.
Okay, so I'm going to, Martin, you're the financial advisor here. I think I'll hand over both of them to you to the next room, and then you can make sure they have a deal.
We are always available to assist.
Go to KPMG and get the deal done. And that's the power and grid decentralization. It's such a whole lot to digest from the budget. But we have a whole lot more coming up, still within the hour. Yeah, the KPMG Arise News Budget Day 2025 conversation continues now into infrastructure and economic development. Dimeji Salahuddin, who is a partner at KPMG here in charge of infrastructure, is having a 10-minute fireside chat with me on one of the most critical elements of this year's appropriations. As in every year, Nigeria has $100 billion annual infrastructure gap. How do we fix that? That's my first question to you. We don't have the entire $100 billion every year. And for every year that we don't spend, the last $100 billion goes on to the next one and to the next one. So the deficit keeps going up. What more do we need to do? What further reforms are you folks seeing at KPMG as an international advisory firm with boots on the ground in Nigeria and West Africa from here, as how Nigeria, the biggest economy and the most populous in this region, need to fix infrastructure?
All right. Thank you very much, Boson, for that question. And it's a really, really important question because as far as we know, there is no country on earth that has succeeded in mobilizing, long-term private capital from overseas without, at the same time, having a deep and a robust local currency market.
Input.
And the reason for that is actually not far-fetched because the more local currency you have in your funding mix, the lower is the risk, associated with that particular infrastructure venture, particularly in terms of the risk of currency mismatch. As you know, most of these infrastructure projects have to be the users or the beneficiaries, they are domestic, they are local. So your revenues are already denominated, in local currency. So the more local currency you can have in your funding mix, the lower is the risk of the particular venture, and therefore the more bankable, the more viable.
Where do we get this local capital? Who has this deep pocket money? I don't have.
Before I say that, before I respond to that, the other key point to note is that having local currency infusion is also good for the economy. Why? Because it eases the pressure on our foreign earnings. If I had borrowed the money, from offshore, obviously, as I consume that infrastructure, I have to pay back in foreign currency in terms of the principal, and the interest. So the more local currency you have, the better it is, for the economy. Now, in terms of where do we get this local currency funding, it's actually quite there. So today, we have about 23 trillion naira. 23 trillion naira accumulated in the pension funds. And that, incidentally, is the only really deep source of long-term savings in our economy. In other economies, you have insurance. But, our financial markets are not yet, deep and sophisticated. So we have that pot of 23 trillion naira. If I go further, based on PENCOM rules, on the PENCOM guidelines on investment, roughly 4 trillion naira out of that 23 should actually go into infrastructure investments.
But are we seeing that?
That's the point. That's the issue. Only about 1% of that 4 trillion is invested in infrastructure today.
What's the problem?
The bulk of them. Yeah.
What's the problem?
Yeah. I think there are a number of challenges. I believe the biggest issue has to do with the institutional investor perception about risk. As you know, infrastructure as an asset class is a high risk. Infrastructure as an asset class is a high risk investment because it's very long term. You don't know what's going to happen across several economic cycles and so on and so forth. So the point here is that we actually need a new framework that can ensure that this pool of long-term funds that we have in local currency can be efficiently allocated into infrastructure on a sustainable basis.
How do we achieve that?
Oh, well, fortunately, the government has realized that this is a big challenge. So there is actually an initiative, that is underway, which we expect is going to come in the form of a major intervention in the market that would help to reduce, the risk of infrastructure investment to a level that long-term private institutional investors, such as the pension funds, can then be comfortable to put their money in it.
I like that. But again, we've tried PPP and we're still trying it. Why does that seem not to bite as deep as we would want to see it? With the government stretching a hand and meeting you, private sector, having this handshake. Why is that handshake not strong enough for infrastructure?
Okay. Maybe in answering that question, it's important, to step back and say, why do we even need PPPs? Why are they really, really important? So we have an infrastructure master plan. It's a 23-year plan, and the first 5 years of that plan says that we need to be able to invest on an annual basis in excess of $100 billion in order to be able to move our infrastructure stock as a percentage of GDP to about 70%, which is where our peer countries are. Now, from the estimate, what is clear is that at least 50% of that sum on an annual basis, equivalent to about $50 billion, has to come from private sources, meaning that we've got to have a handshake, between the public, and the private sector players. But of course, the private sector guys are not going to come in with their money, with their, technical capacity, unless you deal with a number of, challenges, which I'm happy to go through.
Give me a list, a short list. Give me the top 3.
Okay. There are several challenges, but I will highlight a few, maybe 3 or 4. The first is the environment. Particularly in a developing country context like that of Nigeria, you have to actually go beyond trying to de-risk the project. You have to do things that can make your environment attractive. You have to de-risk, the country itself. So I'm talking about things around ease of doing business, sanctity of contracts, rule of law, are things of that nature.
It shouldn't. Aren't those the things we say when we say we're open for business? Aren't those the things that we said? The door is open. Come in.
It's easy to say it.
Easier said than that.
Yeah.
The reality is what investors are telling you, folks.
Absolutely. The thing is that it requires a lot of hard work. The intention on the part of government is genuine all the time, but it requires some serious hard work to be able to make the improvements that we need in terms of our institutional policy, legal and regulatory framework, and bureaucracy.
I've heard that 1,000 times elsewhere, in and out, across Africa. Bureaucracy. It looks like that's one major problem. What is on your list?
Okay, so that's one. The other thing is that, the other key issue is that we, as a country, we actually need, what I will say, a more cohesive framework for originating and prioritizing our infrastructure projects. Today, within the government, there is no central ownership, and mandate for this. That's one dimension. The other dimension to this issue is that we have all sorts of plans. You have our 30-year plan, the Agenda 2050. You have our infrastructure master plan. You have the medium-term, the 5-year, medium-term plan. You have our MTEF, medium-term expenditure framework, and you have the annual budget. The key challenge, is that these plans do not talk to one another enough. So you have a long-term plan, and your shorter-term plans should feed off your longer-term plan. But we don't see, sufficient cohesion and integration among this. And also importantly is the issue of alignment with the states in terms of the priority, because it's the states that have the land and everything, so they are really major partners. Okay, so those are some of the issues.
Let's have our own handshake here. We make our own very strong. KPMG and Arise. Thank you very much for this conversation.
Thank you.
It's an ongoing one, and I'm sure you brought out some very key points that the government needs to look. There's a need for that cohesion, not only between federal and state, but within the various policies and reforms that even the government itself wants to do at the center. But we thank you very much for bringing your thoughts into today's Budget 2025 KPMG conversation. We take it from here. Let's talk about manufacturing
And this is at the heart of it all. We'll be right back into Stand By Everyone.
Welcome back. We're live on Arise News here at the KPMG Insight Center. It is still, of course, Budget Day 2025, Arise News KPMG collaboration. It's my favorite topic, and unfortunately, we have such little time. But let's jump into it as quickly as possible. Technology, artificial intelligence. I have with me Lawrence Samadi, partner, KPMG, and Ladi Asuni, partner at KPMG as well. Thanks to you both for joining us and for being here with this fantastic conversation. We have on the board there 1.62 trillion technology and digital economy that has been allocated. Lawrence, what does this say about the intent of the government in terms of boosting technology?
You can tell that in recent time, we're all about action and just less intent. And I think this is a really good move. Recently, the US allocated about $17 billion for Bitcoin and digital assets. Now, that's a huge statement of intent. And some might argue that that is actually very good for Mr. Elon Musk, for sure, our friend. But just coming back home, we all know that infrastructure is so crucial for the digital conversation. Recently, KPMG has launched a major AI thought leadership in conjunction with the World Economic Forum. And in this thought leadership, we talked about data, we talked about infrastructure, and we talked about security and privacy. Now, infrastructure is so crucial because you then realize that everything it's got to rest on infrastructure, with connectivity, the broadband, major data centers, even chips for supporting the processing. So super crucial, and I think that's why the power sector and the Ministry of Science and Technology would have to actually come together to make this happen.
We need electricity for tech.
100%.
Larry, there's the money you're allocating. What about the other side of the equation? The skills pipeline. For instance, 3MT from the Digital Technology Ministry, how much does that address the skills pipeline and holistically the other side of the equation?
Thanks, Rotus. So the 3 million technical talent initiative is definitely a step in the right direction. As you would know, I think right now they've covered about 10% of the total talent base. About 300,000 people have been trained in the first two cohorts, and there's an ongoing cohort for another 90,000. So it addresses part of the solutions. But is it adequate? I think that there's a need for more. If you look at the recent development, especially with China, we have the DeepSeek, more recently Manus AI. And the founders, you see that they have very solid, training, education in artificial intelligence, electrical and electronics engineering, and the likes. So the 3 million technical talent basically addresses foundational technical skills. It bridges the immediate gap, but the longer-lasting, sustainable approach to building talent, technology talent, has to go back to our educational system, the educational curriculum. How do we build a team of engineers right from the foundation of our universities, in our primary education, secondary education, so that we are able to have that steady pipeline even beyond this 3 million talent program.
Thank you, Lonnie. Lawrence, I have Grok AI on my phone, right? ChatGPT and all that. What's the immediate benefit of AI to the public-private sector?
I think the first part I would associate to this is the efficiency that it just brings to everyday life. For some of our clients, they're bringing in efficiencies into how they monitor controls, how they manage risk, how they make investment decisions. AI is sort of just helping with all of that. And that's what the large language models are helping you do. Because when you aggregate a lot of data, you can make better decisions because the data is now being trained over and over and used by various people. Ladi talks about DeepSeek, and we all know that they built a smarter, and cheaper, compared to open source and what open source has done. So I think we've got to just find a way to see how everyday life is improved. Just yesterday, I was following a young man's story. His name is Aziz from Unilag Mechanical Engineering. He's built his own GPT called Yan GPT. And basically, he's just taking the basic everyday language you would hear on the streets of Lagos or on the streets of Nigeria. Yeah. And anyone who's trying to just do basic AI, you can tap off this and tap into the rest of accounting GPT, finance GPT, and everything as a service GPT, essentially, yeah.
Ladi, any fear that this can make students lazy in terms of what these AI assistants, agents can do in terms of research queries, so on and so forth?
All right, thanks. So just referencing our recent publication, like Lawrence talked about, the Blueprint for Intelligent Economies, we identify skills, awareness, as well as application of AI as foundational elements of building sustainable, intelligent economies. While there are fears that adoption of AI can make students lazy, just like you've rightly said, the truth of the matter is that AI is a tool, right? It's not a replacement. So the real focus should be on how do we ensure sustainable application of AI. Part of the things that our reports recommend is taking that sectoral view to how AI is applied. How do we integrate it, into our curriculum? How do you apply AI in agriculture? How do you apply AI in security? How do you apply AI in finance, financial inclusion, or even in things like in delivery of government services? Now, when we look at our students, the fear can be that, okay, if people have, just like you said, you have Grok on your phone, does that mean that you're not having genuine conversations with people because, people can easily look up answers? We need to shift from our traditional educational delivery or assessment models to things that require interaction, to things that are focused on application of AI as opposed to the traditional, the take assessment home. We need to look at how people can collaborate, how people can deliver, and apply AI in real problems in the society.
Lawrence, let me wrap up with you. I had you on my show, Global Business Report on Arise News. Yes. Can you quickly, actually, we have to go. We have to go because we're going to cross over now to the Minister of Finance, Coordinating Minister of the Economy, Wale Edun, who is going to give us his take on the budget. Lawrence, Ladi, thank you so much. Really appreciate it. Let's get over to Abuja now and talk to the Honorable Minister, Wale Edun. Good afternoon to you, sir. Thank you so much for joining us here on Arise News, KPMG Budget Day 2025. We've spoken a lot about the 2025 budget of restoration. Sir, Honorable Minister, I want to get your thoughts on how you see things playing out in 2025 with this budget of 54.99 trillion naira.
Discussion of AI. There are 4 things that are really key if we are to benefit from AI. And it's quite a tall order. You need the computer capacity, you need the data, you need the skills, and you need the electricity. But that's an aside. Let me first of all take advantage of the platform you have given me to quickly talk about the Nigerian economy and the outlook. Under the renewed hope agenda of President Bola Ahmed Tinubu, I think all agree that in 2024, the economy has made significant progress. And let me say that at the base of it all has been a recovery and an improvement in the security situation in Nigeria. That lays the basis for all else. And it's no surprise then that the 2025 budget, the largest single item, is in fact security and defense. So, in 2024, the economy did make significant progress, as we know and we have heard. Growth was 3.4% over the year, but it's accelerating. So it was 3.84% in the last quarter. And of course, this is the fastest it's been in recent years, led by, we must say, the services sector and to an extent transport. But what I will say there is that these are the early movers, but it's expected that the economy as a whole will have a broad-based increase. On the external sector, the exchange rate remains stable. The trade surplus is positive at 13% of GDP. And of course, as we know, the foreign reserves have risen to over $40 billion through the sterling work of the central bank in particular, but many other stakeholders as well. On the all-important fiscal side, as we know, revenue has grown 60%. The key subsidies have been removed. Production of crude petroleum is up to 1.8 million barrels per day. And of course, we've saved overall 5% of GDP in subsidies. And this, of course, has presented an improved incentive framework. And it's not just the financial side. The removal of those distorting subsidies also meant that the incentive framework for Nigerian and foreign investors has been improved significantly. In a nutshell, the playing field has been leveled. The monopolistic structures and the patronage-based system has been dismantled. When we look at the all-important fiscal situation, the fiscal deficit is down to about 4.4% at the end of the year, and debt servicing is down from a totally unsustainable well over 100% to now just about 60%, and with revenue increasing, that figure is meant to be falling. So, and what we are looking at is growing our way out of the deficit, growing our way out of relatively elevated debt levels. Of course, on inflation, we all acknowledge that there's a way to go, but the signal and the direction of travel is that inflation is expected to fall. As for the outlook for 2025, we can expect continued and even greater macroeconomic stability, an improved business environment, and even more positive outcomes. We've projected growth at 4.6%, but I think that is not our ambition. Our ambition is to, as soon as possible, get to about 7% per annum GDP growth, because it is at that level that you begin to really lift people out of poverty. Let me just say that we expect stronger revenue growth, higher oil production, as you have seen in the budget estimates, and continued savings from the non-spending on subsidy. But more importantly, we expect that there will be greater ease of doing business. And this is all to support the private sector. Because as we have even heard earlier today, it is the private sector that has the money. It is not government budget that will fund, for example, the infrastructure deficit, which requires $100 billion investment per annum. So the plan and the commitment of Mr. President and his policy is to crowd in the private sector. And let me just give us some examples of success in that area. I've just talked about infrastructure. Last week, the President, Chairman of Council of the Federal Economic Council, cleared the way for private sector investment that had been waiting on the sidelines for upwards of a year as a result of bureaucratic delays and other structural issues, which your commentators have talked about, the need for structural reform. So the way was cleared for the private sector to construct Benin-Asaba Highway, Lagos-Abeokuta Road, and so many others, on a private-public partnership. So in sum, we are looking at 5,000 kilometers of road, which investors that have gathered long-term finance, much of it from Nigeria, in order to build these roads, concession them, toll them, improve the travel time by 75%. So you reduce the travel time, for example, on Benin Asaba from 4 hours to 1 hour. That is the kind of increased productivity that the economy leads. So the investment climate is being improved and has been improved. Oil and gas, agriculture, as you heard earlier today, healthcare, housing. And let us not forget the fact for about the first time in 40 years, we now have domestic refining of crude petroleum with a line of sight on 1.2 million barrels per day worth of processing capacity, of course, led by Alhaji Aliko Dangote, 650,000 barrel per day refining and petrochemical company. So as a result of these investments by the private sector, which every effort is being made to encourage, we expect productivity growth, growth of the economy, creation of employment, and reduction of poverty. And of course, when the private sector grows and thrives, that creates revenue for government, tax revenue and other revenues which go to help with, as we had said earlier, the fiscal deficit. But just to say a word or two about government borrowing. Initially, the budget proposal had 80% domestic funding, 20% foreign funding to fund the deficit. The current budget has 40% domestic funding, 40% domestic, 40% foreign, and 20% from other sources. What that means is that there is room being created for the private sector. As opposed to crowding out private sector investment, room is being created for them to be able to access the markets in addition to their equity to invest. Let me also touch what I think is an important aspect of Mr. President's philosophy of committing to private sector-led growth for this economy. The Nigerian Railway Corporation recently commissioned to a private company the Lagos-Ibadan rail track, time on that track to move their goods. It's another important example of increased productivity, making room for the private sector to come in and invest. So let me also round up this picture of what we can expect in 2025 by saying that government will continue in 2025 to optimize its balance sheet. And that means making the most of its assets, including allowing the private sector in for joint ventures, for public-private partnerships, and generally investment alongside government as private sector participation in the economy. When we look at the solid mineral sector, which has significant funding from the budget, it is because in the ground, assets are virtually worthless. They have to be worked, they have to be mined, they have to be brought up to be of value to the economy. And in the same time, in the same way, we have other assets in the ground which we can negotiate on. We can get value for them even while they're in the ground. So that's the direction of travel. That is the commitment to leveraging on public-private partnerships to grow the Nigerian economy. Thank you.
Honorable Minister of Finance, Coordinating Minister of the Economy, Wale Edun, thank you so much for the optimistic picture of the future. Heavy emphasis on domestic revenue mobilization, also on the private sector, leveraging on them, bringing in investments, cutting down travel time, stable exchange rate, higher oil production, and of course, the likes of Aliko Dangote in the downstream sector, of course, with improving our refining capacity. We thank you so much for joining us live from Abuja to share your thoughts with us here at KPMG Arise News 2025 Budget Day. Thank you so much, sir.
Thank you.
With manufacturing, we have a panel up next to react to what the minister's comments and also talk about boosting manufacturing here in Nigeria based on what we're seeing with the budget. It is KPMG Arise News 2025. Yes, go ahead, sir. Go ahead, please. Of course. Of course.
If I may still have the last word, I once again commend KPMG, and of course I commend Arise for this production. And also, I would like to commend the Minister for Budget and Economic Planning, as well as the National Assembly, and all those who have put together this all-important 2025 budget of restoration under the leadership of President Bola Ahmed Tinubu. Thank you.
Thank you. We appreciate the shout-out. Thank you. Well done, KPMG. Well done, Arise News. All right, we'll be right back after this break to talk manufacturing. Stay tuned. Welcome back to the KPMG Insight Center here in Lagos, Nigeria. It is, of course, KPMG Arise News Budget Day 2025. We move on now to manufacturing. We have our panel here with us. Let me introduce them. Looking very much forward to talking to them about manufacturing. Dr. Muda Yusuf, Director, CEO, Center for the Promotion of Private Enterprise. You're very welcome, sir. We also have Bolara Okunowo, MD, CEO, CAP PLC. I got that correctly, right?
Correct.
Okay, I almost said CAP PLC. And Ijoma Emezie Ezigbo, Partner and Head of Transaction Services, KPMG West Africa. You're all very welcome.
Thank you.
Dr. Musa, let me start with you. We saw volumes, FMCG volumes fall about 17% in 2024. Litany of reasons, inflation, currency, volatility, and so on and so forth. What's your outlook for manufacturing for 2025?
Well, you know, the manufacturing sector was one of the biggest sectors that suffered serious shocks from the current reforms. Shocks especially from the FX and shocks from the energy prices. You know, manufacturing by nature has very huge exposure to foreign exchange and to energy. So those reforms, you know, change a whole lot, especially with respect to cost of production, competitiveness, and all of that. So it has been a very, very challenging period, especially from the second half of 2023 through 2024. But from the second half of 2024, we begin to see some level of stability on the macroeconomic side, which has brought some stability to the system and which is easing the pressure, you know, on the manufacturing sector. And we're also beginning to see some, you know, easing of the pressure on energy prices, not necessarily on the electricity, because we still have a big issue with power. You know, there's still this problem of subsidy conundrum in the power sector, which is yet to be resolved. So from those 2 points, I think there has been some improvement. And I can say that for manufacturing, we can say that the worst is probably over. You know, but we are hoping to see improvements with respect to particularly the energy and with respect also to financing costs. You know, if you look at the books of many of the manufacturing firms, the financing costs have been huge. You know, we are talking about 30%, 35% interest rates. That's incredible. That's outrageous. So we need to begin to deal with those issues. And I'm happy that when the minister was here, he talked about the budget allocation for Bank of Agriculture. Already the Bank of Industry is doing a bit, but many of the SMEs in the manufacturing space also worry about the fact that even for the development finance institutions, most of them are asking for bank guarantees, which they don't have the capacity to provide. So there's still this big issue around financing costs, around the issues of cargo clearing, of raw materials and so on. So those are the issues that we are hoping that going forward, we'll be able to deal with in order to put the manufacturing sector on some steady path.
Thank you so much for that. Bola, let me call up going on around the world with tariffs and geopolitical tensions and so on and so forth. How do we shield our manufacturing sector from exogenous shocks?
No, very, very good question. And I think, firstly, I would like to commend the federal government for the budget of restoration that has been announced for 2025. I think we appreciate, from the sector, we certainly appreciate the focus on economic stability, as well as the focus on stimulating economic growth. I think that's very, very important. So yes, we have domestic issues, and then, of course, you now look at the global stage, and you have all of the geopolitical tensions that we see everywhere. But the way that we actually see it, or the way I interpret it, is that it's actually an opportunity for the local industry and for us in the manufacturing industry. What do I mean? It means that there's a lot more pressure to look inwards and place a greater demand on our local industries, which is very, very key. So to really be able to sort of absorb some of these shocks as a nation, we need to develop our local industries further. What are the things that we need to do and put in place for that? There are many things that we need to put in place, and I think the budget covers a lot of those points. One, we need to put that investment into infrastructure. That's very, very key. We need to be able to put a lot of the investments into the local industry. I think some of the speakers earlier spoke around local sourcing of raw materials. That's still a very big concern for us. And I think, as Dr. Yusuf mentioned, the FX exposure, having to import your raw materials, turn it around and process it. So the more that we're able to source locally, the greater the ability for us to be more sort of self-reliant as a country. The other thing, again, that we need to put in place, really all the things that we need to develop the industry. So is it capacity building? Is it education? Those things will benefit the industry. Is it investment in infrastructure? We talked about that earlier, about bringing down the logistics cost of transporting, moving goods around the country. Is it in terms of technology? We touched a little bit on that. Again, those kind of things benefit us from a local industry perspective and strengthen our position. So yes, I see it as there's a lot happening, but there's actually a lot of opportunity. We just need to make the right investment and really sort of boost our local capacity.
Thank you. John, let me come allocations to industry, trade and investments, 110 billion, you've got 6.8 trillion allocations to infrastructure, so on and so forth. We've had a lot of multinational, enterprises that have either switched business models or changed or left the country because of some of these challenges. These allocations sufficient, you think, to make some kind of improvement as far as manufacturing is concerned?
Sure. I would say I would have to just be a bit cautiously optimistic about that. If you look at the estimated at about 3 trillion over the next 30 years, the minister broke it down in terms of annual infrastructure spend of about 100 billion required, $100 billion requirement. So when you look at the 30% allocation, seems a bit reasonable, but still very far from where we need to get to, especially when you also look at the actual spend vis-a-vis the budgetary allocation in terms of the volume of infrastructure development we're able to achieve. Historically, you see that Nigeria has struggled in terms of project implementation, where we always have significant leakages, significant cost overruns and delays mean that we are really not able to fully exhaust the budgetary allocation. And even when we are fully able to adjust it, we're really not able to really achieve the level of infrastructure development that we expect to have. When you look at some of the things that the minister said, especially when he mentioned PPP models, for example, the question for me as a Nigerian, and if I were looking at government, is to say, how do we leverage outside of budgetary allocations? How do we leverage the models available to be able to drive increased investment in infrastructure? When you look at what Toleram Group, for example, is able to achieve in the Lagos Free Zone, where they've been able to attract a significant investment also, other than theirs as project sponsors, they've been able to leverage that investment and then attract 50 from development finance institutions who are really looking to invest in this sector to be able to help us boost our manufacturing capacity. So if you look at it in absolute terms, may look great, but when you look at it in relative terms to say where we are and where we need to get to in the next 30 years, then you realize that there's still a lot of headroom to make additional investments.
Thank you for that, Doctor.
Just to add to
please,
that,
please.
Now, when we talk about investment in infrastructure, there's a whole lot of issue with capital budget implementation. And you know, it is in this capital budget implementation that you can deliver infrastructure. For instance, the 2023 budget had to be rolled over to 2024. First, it was rolled over to June, then later rolled over to December. The 2024 budget has now been rolled over to June 2025. If we are not careful, we have to roll it over. Then 2025, if we are not careful, may be rolled over. So it is important for government to also pay attention to the issues of capital budget implementation, particularly because we also need to disaggregate capital budget. Because sometimes when you look at the budget documents, vehicles, computers, buildings, people regard that as capital budget. But from the manufacturing point of view, what matters most in capital budget is infrastructure spending. And we need to do a lot more to ensure proper implementation. Because that will enhance the credibility of even the budget document itself. So that when you say you are allocating so much to a particular infrastructure, you should have some level of confidence at least that will deliver up to 70, 80% of it. So that capital budget implementation issue needs to be addressed. You need to listen to the presentation during the budget defense. Many of the ministries were complaining about releases, but there was a particular ministry that complained that only 5% was released as at the end of December. So it could be a problem of bureaucracy, it could be a problem of fund, whatever it is. I think we need to do something urgently about the issue of this capital budget implementation.
Well said, well said. I want to move to the Africa Continental Free Trade Area Agreement. In order for Nigeria not to end up being a dumping ground, how can we take advantage of these agreements and become, manufacturing hub of the continent, at least for sub-Saharan anyway?
Oh, excellent question. And I think that's another opportunity, again, that lies really before us. And it's really up to us to really sort of seize that opportunity. If you look at intra-Africa trade today, you see that it's only about 10-15% of total trade on the continent. If you look at other sort of more developed continents, Europe, Asia, you see that that is actually around 60%. So there's a lot of potential and there's a lot of room for us to actually improve and increase the activity of trade that happens within the continent. So this free trade arrangement is something that would actually boost and help all of us together collectively. What are the things that we need to do as a country to really benefit from that? I think first step is awareness. We need to just create greater awareness and greater accessibility to companies to be able to realize and actually utilize that agreement and that arrangement. Next up, again, this will not be any surprise, is infrastructure development. I think we'll all agree that today, if you want to leave Nigeria and go to Europe, for example, it's a lot easier to do that than for you to travel across the continent. It's quite complicated. So again, putting in place the infrastructure to enable that. So not just the movement of people to travel for business reasons, but also the movement of goods. We spoke earlier about, just transporting within Nigeria, the need to make investments and improve. Similarly, to transport goods across and around Africa, we need to put those investments into developing the infrastructure for that. That's very, very key. Next thing, if I look at Nigeria again, just touching on what are the things to enable the local industry to be very competitive. We need to look at how do we develop access to raw material, the local sourcing that I spoke about earlier. Again, how do we invest in our local industries, capacity building, education, all of these things. They make us a lot more competitive and at least position us to become this manufacturing hub that I think we really can be for the continent.
Can I actually follow up on that? Because Arise News, we were in Casablanca for an investment forum, and there was a Tier 1 bank MD on a panel that pushed back on the trade numbers, intra-Africa trade, saying that we're not capturing enough of the trade that's happening within the continent, and it could be higher. Does anyone want to speak to that? Because I know we keep this data, and it's been supported that we're not trading as much, but he was saying that no, it could actually be more. It's just that the traders in Cotonou and all these other places were not capturing all this and that. Is it possible that the trade could actually be higher, and it's just a matter of not, I know we're rebasing this GDP and doing all these things to capture all these activities.
Absolutely. So one of the things that we see when we are doing research in FMCG or in manufacturing sector is data.
Yeah.
And you see quite a lot of things happening in the informal market, which is, for the most part, not captured in the data. So when you look at some of the issues that we have around trading within the borders, you see a lot of issues around the porosity of the borders and where you have smuggling. I reckon that those may not have been captured. But I reckon what we want to focus really on is really the actual data that is captured in terms of how much we are shipping, because that's what you can use to drive some sort of regulatory environment and policy environment. But I want to add to what she has just said, in terms of how much Nigeria's manufacturing export contributes to the total export. So today, Nigeria's manufacturing sector contributes to just about the 6% of total exports for the country. When you look at this, when you compare to the likes of China, that are in the 90s, and you compare to the likes of Asia and Singapore that are in their 70s, then we need to have a lot of room to be able to drive our manufacturing capacity. Because when you look at in terms of AFTA, it will be that Nigeria will be a net importer rather than a net exporter. So the question for me is, what do we need to do as a country to be able to ensure that we are driving increase in our manufacturing capacity and the utilization of that capacity? And I mean, Mr. Fufud had mentioned exchange rate environment. Exchange rate environment continues to constrain investment by the players in terms of their capex, in terms of R&D, etc., and in terms of working capital just to fund the business. Yeah. So those are the things that we need to look at. In terms of also localizing the value chain, she had mentioned FX. FX continues to be a big issue because we are FX dependent, even in terms of our input raw materials. How do we localize our value chains to be able to leverage our competitive advantage? Earlier on, Mr. Detiliwa mentioned the issues around the sugar value chain, where we are importing raw sugar to be able to refine. Meanwhile, we can grow sugar extensively. Are there value chains that we need to be able to localize? And when you look at it, it's not just in terms of sugar. You look at in terms of rice, in terms of dairy. Today, we're importing significant amount of dairy when we have some sort of comparative advantage in terms of agriculture. So looking at how we can improve the manufacturing around the food value chain to be able to add significant value to grow our manufacturing base for export purposes. When you look at cocoa, for example, we have comparative advantage in terms of cocoa. The size of cocoa processing is just about $16 billion. But when you look at the chocolate sector, the size of chocolate sector is about $50 billion. How do we add value to our local manufacturing to be able to play better when we can leverage after to drive our exports?
All right.
And just please talk from the perspective of policy. Yeah. Because we need to be very deliberate about driving resource-based industrialization. Because that is where the competitiveness of a country is. Whatever industrialization we are pursuing, let us put it within the framework of the resources that we have. That will help a great deal. Because when we talk about AFTA or whatever, it's about competitiveness. But when you have an industrial sector that is heavily dependent on imports, it creates competitiveness challenges. Now, for example, Dangote Refinery now has, through its petrochemical plants, a very big capacity to produce polypropylene, that can meet domestic demand and even for exports. And this is a very critical raw materials for our industrial sector. All these packaging materials, plastics, they use polypropylene. So we need to replicate that. And if there are core industries that the government needs to support, because even in this space, we don't expect that government to step past completely. There are some heavy liftings that the government needs to do. For instance, we talk about automobile assembly plants and all of that. You need a very strong iron and steel industry.
Jakarta steel.
Yeah. Jakarta and the rest of them. Yeah. I'm not saying that government should go completely into business, but these are heavy liftings that needs to be done to get these things up and running so that you can have a viable automobile and other related industries. The same thing with our aluminum smelter. You need that to develop all these cables and things that people are producing locally. Yeah. These things require some elements of government support. And also infrastructure. Although the minister talked about the role of the private sector, I agree with that. But I still believe that the state has a very critical role to play in infrastructure delivery. Because private sector is about profit. Right. It's about profit. And when we leave infrastructure too much to the private sector, the profit objective will conflict with the economic objective. It will conflict with social objective. And that will create problem. So we need to, look at these things properly so that we can recalibrate our policies properly.
It's a shame we're out of time. I had an inflation question, especially with rebasing. Maybe we'll leave it till next year. We'll see how inflation does over the next year. Dr. Muda Yusuf, thank you so much for joining us. Bola, thank you as well.
Thank you.
Of course, Ijoma Emezi Ezigbo, thank you very much for a very fascinating discussion on manufacturing. All right, we're almost at the end, ladies and gentlemen. We're going to get a wrap-up of everything we've talked about so far on the 2025 budget day, Arise News KPMG. So sit tight, we'll be right back. Welcome back to the Arise News KPMG 2025 Budget Day. My, how time flies. We're here for a recap, key takeaways from everything, which could probably take another hour, everything we have discussed today. Boston, good to see you again.
It's a very interesting time with you, Tola, the CEO, kicking off those presentations. So having heard those presentations break down from the minister, and of course we had the Minister of Finance himself from Abuja, the healthcare sector, infrastructure, power, digital economy, manufacturing, tax, by the way. What's your takeaway?
Thank you. As I sit back and listen to everything, I can't get away from the fact that a budget is just a plan. At the end of the day, you've got to execute on that plan. And that, for me, is one of the biggest points to emphasize here. In order to achieve the objectives that the government has laid out, and I think there was consensus that the direction of travel is right. But in order to get us to the destination, it's going to be so crucial to execute in a disciplined manner. And that's one of the big things that we need to see in this budget. Execution is key.
Mr. Dean Yusuf, chair of the NESG, Nigerian Economic Summit Group. Great to have you here. You were here last year. Good to see you again. What's been your takeaway of everything that you've witnessed today?
All right. So, I agree with Tola. The direction of travel is progressive, is what we like to say. The planned investment in infrastructure, in health, in education, these are trillions of naira. In safety, that gives hope. Execution is important, but we're going to be executing in an environment that is very volatile. What is happening in geopolitics, whether it's done by the US or even local. So we're going to be executing in a very volatile environment. And so that means we need to double down, discipline ourselves, but also pay a bit more attention to the social safety net. So I'm happy with the education fund, also the education loan. But it's also important that we accelerate that and also the social safety net and get from 15 million Nigerians to 50 million to 70 million Nigerians that will get some monthly targeted contributions or targeted money from the federal government. So execute, but also focus on providing the social safety net so that we can have some social cohesiveness and a safe environment for us to operate.
So much attention, Tola, on the federal government in terms of, and you spoke about this. Look, the federal government can do everything. And that panel on infrastructure talked about, look, you just have to align policies and reforms. We're rolling out reforms on a daily basis. State governments are also doing their own. How much more would you like to see in terms of how we align the subnationals with what is going on at the federal level? Because at the end of the day, jobs, agriculture, food, security, education, healthcare, primary, whatever, will have to happen at the state and local government levels.
You make a very important point there. The issue of collaboration and coordination is extremely important, and cooperation. In fact, I would first start with coordination even amongst the federal government agencies themselves. I think there's still room to improve that coordination so that we're seeing agencies all working in concert towards the stated objective. Then you get to the issue of coordination with the states and collaboration. The federal government can't do it by itself. And many of the things that we speak about that really touch the people, they're within the prerogative of the states. When you get down to education, healthcare, you're talking about things that are within the ambit of the states.
The last mile.
The last mile, exactly. So coordinating that, federal, state, local government, very, very important. We need to see that consistency of policy all happening there. The last aspect of this collaboration for me is the point that has been made severally, that government cannot do it on its own. There needs to be collaboration with the private sector. And there you get into the realm of how do you create space and create an environment in which the private sector is ready and willing and able to come in and collaborate with governments in execution. Yeah.
Mr. Yusuf, I'm going to give you the last word. I have to say, you inspired me at one other summit where you talked about Nigeria's population, right? Mm-hmm. And how I carried that across all my business segments, right? So with respect to dividing budgets by the number of people and then getting welfare, education, and so on, is that still a concern for you?
Oh, it's pretty much. It's still a concern. And if I may stress a few things. So for 2025 and 2026, the NESG has come up with 6 areas of focus, 3 critical areas, and then 3 additional areas. So the first 3 critical areas is investment climate, just having the right investment climate. Second is insecurity, and third is food sovereignty. Now the 3 additional, one of them is population. There's population, there's productivity, and we need to tame our population growth. I mean, our total fertility rate is above 4%. And so if we don't reduce that, productivity continues to be a challenge. Our budget is $33 billion.
36, yeah.
South Africa's budget is $129 billion. Right. And so that speaks to the other comment by Tola around we need private sector to be in. And that actually gives me hope that the states will do what they need to do, because states will begin to compete to attract private sector investment. And we're saying that in the Southeast, with Anambra, with Imo State, and Abia State, and how they're all angling to attract private sector investment. And so in trying to attract private sector investment, hopefully you will do a few things in your state to provide the right investment climate. And that, I think, is the carrot that will make a few states to do the right thing. We need to have more Lagos states. We need to have, in each geopolitical zone, we need to have 2, 3 that are where we would like to work and to stay. And so that gives me hope that the state will do the right thing. But on a long-term basis, we need to find ways to tame our fertility growth rate and also then increase productivity.
All right. I think...
Just 30 seconds.
Yeah.
And if you just allow me, Tola, you are our chief host. So what's your outlook at KPMG for this year on the budget? 1 minute.
I would say cautiously optimistic. That's how we would summarize it. I think we see the direction of travel is right. We're encouraged by the reforms, the plans that are within the budgets. We'd like to see, as I said earlier, execution taking place. We'd like to play our role in supporting that execution itself. Nigeria is on a turnaround plan, or as the budget describes it, a restoration plan. We've done several turnaround projects as professional consultants. The one thing I would say is that you never see a turnaround that is successful within an atmosphere of pessimism. So we've got to address the atmosphere as well, increase the element of trust between government and the citizens. And let's get Nigerians talking positively about our country. Because any turnaround, for it to be successful, you need a prevailing atmosphere of optimism, not pessimism. So that would be the other thing I would add to this.
One positive vibes in the room. That's what I see.
Yes. That's
what I see with your team. That's what I see with the minister.
We round off on positive vibes. So Tola Adeyemi, thank you so much for a great presentation, and again for setting the stage for this discussion. Mr. Ni Yusuf, thank you so much for joining us as well. Our thanks to our Minister of Budget and Economic Planning. Our thanks to the Minister of Finance and Coordinating Minister of the Economy. Our thanks to KPMG for bringing together the public sector, the private sector, and most of all, our thanks to you, our audience, for sticking with us and always tuning in for these special programs. That brings us to the end of the KPMG Arise News 2025 Budget Day. Boston, thank you as well.
Let's have our own handshake.
Yeah, thank you.
For the collaboration and cooperation between KPMG
and Arise
the Arise. Thank you so much. Let's do it again next year.
Yes.
Absolutely.
Indeed.
Exactly. That's an I.
Thank you.
Thank you so much, everyone. And regular program will return on Arise News.